we can use it later.
Yeah. Okay. First of all, I apologize for the goof up actually that happened. We're just starting to use this GoToWebinar for the Investar India webinars, and today morning there was a webinar, and the second one that Dr. Musa was conducting, somehow it was scheduled for 7:30 on our website, but when the webinar was created on the GoToWebinar site, we scheduled it for 7, so that's why all the confusion happened. Apologize for that, for everybody, for for waiting. I'd like to introduce Dr. Musa. He's basically the head of Bangalore Investors Club, and he's doing this webinar for the first time. He's a CMT and a doctor by profession, but as you must have seen on the link that was provided in the webinar description, he's a very talented and qualified person. And without saying much, I'll just have him take over the mic and carry on from here. Thank you.
Sure. Thank you so much, Himanshu. Just want to be sure that everybody can see my screen. So can you just confirm? You should be able to see the Investar software up and one notepad right in the middle. So Himanshu, can you confirm that?
Yeah, I can see that.
All right, fine. So I'm assuming that everybody else can, because I'm not able to see who the participants are, etc. So fine, we'll just get.
Oh, you are not able to see that, Dr. Musa?
No, I just can see you and me. I can't see the participant list.
Okay, that's not a good thing. So in the attendees, because you are mentioned as part of staff here, right? And then there are some 25 attendees.
Yeah.
Right? There are 2 tabs here.
Yeah, I guess. Yes. No, I'm not getting a second tab.
Okay, because.
Okay. Right. Okay. I think if there's any question, then I mean, I think you just have to put it out there and then you can refer it to me, because I can't see anything my side.
Okay. Well, if you want, I mean, we can. I mean, I don't know if there's any other way of doing this, but we can just restart it. You can start it on your side if that will make it better.
No, I think then everybody else has to join in. It's okay. It's okay. Not an issue. Absolutely fine.
Okay, fine.
I probably just need some of your help more with I think using the Investar software. So yeah. Okay. So good evening, everybody. My name is Dr. Musa. I'm actually a doctor by training. I've done my MBBS, my MD, but I've been in the world of financial markets now for about 15 years now. It's very kind of Himanshu to have invited me to deliver the session. We normally do this in Bangalore Investors Club every Friday evening, and it's the first time that we're doing it with the Investar software. I'm actually a little bit new to the software, but I must say that the more I've been using it over the last 1 week to get familiar, I've been really impressed with what Investar has done. All congratulations to Himanshu and his team, because I really think that there's nothing that is at this level that is available in India at retail level. It has some institutional level features that I've seen on far more expensive tools, and that is available to us at these prices is just extremely good. Of course, there will always be things that people will not be happy about, but I think for the effort that they've put in and the services they're giving, just hats off to them, and I wish them all success and many more good things to come. Right. So with that, I just want to
sorry, Dr. Musa, for interrupting. I think I've been able to figure out now all attendees can view the attendee list, so you should also be able to view it. Just please, can you confirm?
Yeah, I can.
Okay, great. So now you can directly see everybody, and also I think there's a question screen also on the left. I can answer the question, right. That would be that I'll be able to answer, but otherwise sure. Yeah, okay, yeah, thanks.
Absolutely fine. All right, yeah, done. Thank you. All right, so let's not take too much time in talking about other things. I think everybody's interested in getting down to business, so let's do that, and maybe at the end, if anybody has questions, we'll be more than happy to answer those. So just one small thing you'll have to excuse me for in between is that I'm probably using Investar for the first time in terms of doing a webinar, so I might goof up a bit, so my apologies on that. and I try my best to make it as smooth as possible. So normally the way I do my market analysis is a straight top-down approach. I'm sure most of you know what that means, and what I start with, and I like to do, is start with the global scenario. So what we will do is look at the global indices, then we will look at the India indices, and in that we'll look at sector indices, and then we'll try and locate which are the sectors and stocks which are really doing well. And I think that's really the great strength that Investar has, that it is allowing us to really filter through the various stocks in so many different ways. And I will then look at the screeners also to help us locate perhaps live trading opportunities. So what I'm going to do is going to review the global and downwards indices and look at what's happened across the world, and then try and figure out or just have interactive session on what we could look forward to next week. So with that introduction, let's get started. So what are the global events that we might be aware of, or you might be aware of? I'm just saying what comes to my mind, and I'm sure I'm going to miss out on a lot. So please feel free to interact in this session. I don't want it to be a one-way thing. So not in order of any priority, but we have Greece as a problem going on, and the question of what will the Troika, which is the European Central Bank, the European Commission, and the IMF do vis-a-vis Greece. Will Greece leave? Will they default? They have only 3 weeks of cash left, and as you all know, the European Central Bank has now stopped using Greek government bonds as collateral. So that introduces a big question mark, and as some of us probably know, the Greek index and the market fell, I think, 22% intraday yesterday. So this is one big overhang which is there as far as the global affairs are concerned. We have Ukraine, which is not to be forgotten. So we have Angela Merkel and Holland, I think, from France, who have flown down to Kiev and Moscow to try and resolve that European issue. The US is trying to put arms into Ukraine, and if it does that, that whole thing could flare up into one bigger event, which will have consequences on not only political stability, but as far as we are concerned, we will also have consequences on the price of, say, crude oil or various other things that will be affected, and food, etc. So that's one flashpoint that we have to keep a finger on, and anything could happen at any time. Just on the issue of Greece, let me just go back to, in a sense, what happened to, let me see if I can bring this up. Okay, might be a little slow with this, so just bear with me. Okay. What happened to Nifty on Friday when we were seeing the intraday charts? If you look at it, very quickly the market just crashed towards the end of the day, and that basically happened because the news came out about the European Central Bank not willing to, so not Friday, yesterday, sorry. So I'm talking about this part. This is intraday, 15 minutes. Am I looking at the intraday chart? Yes. Okay. Okay. So if you just focus on this part, this vertical zone from here to here, which is what happened on Thursday, Indian markets were fine, and then the news came out that the European Central Bank would not accept the collateral, and this is the consequence of that, almost 100+ point fall that happened. So these are what we call event risk in the market. Nobody could have foreseen it, but this happened, and there could be more news that comes out along these theme in the weeks or days and weeks ahead. It's not something that we should forget. So then Ukraine is an issue. We now then of course have the Delhi elections locally, and there are a lot of, as usual, pundits talking about who's going to win. If BJP does not get the majority, then what are the consequences? What do they say about Modi? And now we have all the national parties coming into pitching for Kejriwal. So it'll be really interesting to see what happens on Monday, Tuesday. Then there is the what would we say, OFS overhang, if you can call it that, right? So you had 22,000 crores being sucked out of the market, moving into Coal India, and a lot more OFS issues along the way. So in a sense, how do people fund the OFS buying? Either it's very unusual for market participants to bring in fresh money into the market. They usually will sell something to fund the OFS purchase, and there are several multi-thousand crore events like that down the road. So this is a supply issue, and the stock market could get sold off in order to fund the OFS. Fifth, fundamentally, so when I say fundamentally, I'm referring to the various fundamental ratios like PE, dividend yield, book value, etc. of the Nifty itself are, I wouldn't say they are terribly expensive, but they're slightly on the expensive side. So that is, let me put it, just slightly expensive. And then 6, you have the, provisioning by the PSU banks, which is much higher than what was expected. These are like, overall market overhangs, which are going to probably stress the market down. And if I come to individual, or rather the chart itself, look at the Nifty chart. I'll come back to the global indices in a while. I'm just putting out the parameters. And we go to, zooming out. So what we have is the Nifty having gone all the way there, and then we had a very strong bearish engulfing pattern that happened. So this big red candle, and that happened on strong volumes. And ever since then, we've not seen a single green candle in the last 5 days. And according to me, the volumes have really not gone down significantly on the Nifty. So I would interpret this as there is some not strong selling, but it's not small selling either. And if one were to, let's say put a trend line, then clearly some of the shorter term trend lines are have been broken, as in say that one there. Okay, so if you are a multi-week or a multi-day trader, then definitely you are out of the market. But on the other hand, if you are a longer term investor, then maybe this is a trend line. I'm not trying to fit anything. I'm just trying to, I'm just trying to pick the best fit where most of the points sit. And this is definitely far from breaking, but 8200 is a distinct possibility because of these technical issues. But at the very least, at this point, then I think this is where the market would come. 8600. We haven't come to that yet. Okay, 88. Today's candle low is 86.45, but quite possible that we would come there. So that's a level I would look out for in terms of the Nifty. Now, we were talking about the global issues. So this is I was just connecting all these non-technical issues to the chart. And now let's go and look at the global indices and see where they are. So now let's start with not in any particular order. Let me just sort it out by name. Okay, so let's do US first. So let's look at Dow Jones. Where did that? Yeah. Right. So this is the Dow Jones index. You have the chart itself over. Let me do some long-term stuff here first. Okay. So I'm assuming that most of the participants here have at least basic knowledge of technical analysis. I'm not going to be explaining any terms as such. If I say take the entire data that we can get to just do a very quick long-term analysis of the Dow Jones, and let's just make this weekly to make it a little clearer. What we have on the Dow Jones is perhaps a trend line from 2011, and that trend line is possibly something that could be under threat in the days to come. And if we were to zoom in, sorry, yeah. All right. What you have seen is, of course, yesterday's candle. This is not today's candle, right? This is all end of day. This is not live data. You've seen that we've come to more or less the support zone, and just sat there as of now. But if I went to a daily chart on the Dow Jones, then, and I zoomed in, sorry, then what you can see on the Dow Jones is clearly right now a downtrend line which has been broken out of, right? If I put that, actually not broken out of, so it's exactly there, right? I'm just connecting the extreme dots to take a conservative view today. So that's where we are, and wherever the Dow Jones is right now is fine. It's an intraday situation, but wherever the Dow Jones closes is where it will be interesting to see. And so the point here being that Dow Jones is in at least a multi-week downtrend, and possibly this uptrend that we had put here is possibly under threat. There are certain levels that you need to watch out for on the Dow Jones. That's a pretty good support zone up to about 17,000, and that breaks then 16,800 on this trend line, and after that we could really go down. Just to get another perspective, let's look at the broad market in the US. So Dow Jones is just 30 stocks. This is the S&P 500, and again the S&P 500, after making massive highs after the 2008 peak here, 2007-8 peak here. If I were to zoom in a bit, sorry, and connect the long-term charts, then
you can use the zoom. Yeah. Sorry to interrupt. You can also use the zoom area, Dr. Musa.
Yeah. Right, it's not something I'm used to.
Yeah, I mean, just yeah, no problem.
Okay, right. So yeah, thanks for that. They keep reminding me though. I mean, really. Okay, and what you have on the S&P 500 is not so much a downtrend, but a sideways move on the S&P 500 now happening, and we are in a rectangle formation. Okay, so that's consolidating. Now, one thing to keep in mind is, some of you might know, we don't have a chart of that here, of course, is that the US dollar has been getting stronger across the world. And one of the things about the US dollar getting stronger is that while it's good for the domestic American economy, it's not good so much for the export-oriented companies from the US. Having said that, US is not principally an export-oriented economy, definitely not anything close to what, say, China is. It is the other extreme in a sense, and their domestic economy becoming stronger. They're getting 4-5% GDP growth rate in the last quarter is very healthy, and it could be that in the quarters ahead we see China cooling off, and we see US becoming a stronger economy, and US leading the maybe the world a little bit out of the financial trouble we are in. So having said that, just wanted to just cross my mind, so I wanted to point that out. This has it's a two-pronged thing. Why I say two-pronged thing is, for the export-oriented companies from the US, it's not going to be so good, but for the domestic companies, it's going to be pretty good. And what you're seeing on the S&P 500 is a sideways consolidation of that uptrend which is going on for the last several years. But on the Dow Jones, you're seeing a downtrend over the last 1 month. These sort of divergences can sometimes are indicators of something not totally in sync with the US markets, of course, and that applies to any other set of indices that you have. Whether the Dow Jones in a downtrend is a precursor to the S&P 500 going down, or is it just one correction and it will go back up again. So what will be very important is to watch the S&P 500, whether it can break out of that level of 2065, say 2100, or on the other hand break down below 1950 or 1970, and then those are the decisive breakouts or breakdowns, and then we'll get a better sense of how the broader market in the US is doing. So that's the US. So US is sort of split down the middle, I would say. Dow Jones showing weakness, short term, versus S&P 500 showing some strength. And every week, you just do this on a regular basis, like we do the India market reviews at Bangalore Investors Club every week, every Friday at the same time. You will see how things change every week, every month, and how you have to then adapt to the markets and change your investing and trading approach to that. So that's the US. Now let's look at, say, the European indices, and we will look at FTSE. So if you look at FTSE on the long term, now the UK market is clearly struggling, right? So that's where the 2007-8 peak is, and you can see that the UK market, the FTSE index, is just gotten there as of now, but really has not been able to break out of that at this point, right? And we'll have to really see what it does. Looks like the patterns that we are seeing here, it wants to break out, but if you're a Dow theory follower, Dow theory very clearly says wait for the evidence to happen and then you trade. Suppose you had gotten in here or here anticipating a breakout, then you would have at least had to suffer in the short term this fall, and there was no guarantee when this fall was happening that you're going to recover like this, right? So this is there. Remember, in UK we have an election coming up in the next, I think, 3 months. I think the election is in May, if I'm right. Please correct me if I'm wrong. And with what is happening in Greece with the left party, so let's actually put that down in our thing. All right. So elections in UK, will the left win? All right. So Cameron might be on his way out, for all you know, with what's happening in Greece. You've seen protests happening in Spain, and this would spill over into other places. And it's not like the UK economy, though healthy compared to many others, it's not in the healthiest of states at this point. So what you can see here on the FTSE is at a very critical resistance level. Until that breaks out, we can't really say anything, though at this point it looks like it might do that. Having said that, I'm sure all of you would know about these candlestick patterns, which right now we are seeing a lot of hanging men in that. One second. Yeah. In the chart. So yesterday and day before yesterday you had hanging men there, so got to be a little careful. So that's the FTSE. The next big one in the US, in Europe, is the DAX. So let me get that. Okay, let me just make this a little smaller. Yeah. So DAX is probably the index in Europe that has gone way beyond anything else. It's really the benchmark there. Of course, the German economy itself is doing extremely well, and that's reflected in the index. So what you have here is this lower level, the 2007-8 peak. It clearly crossed that from 8,000 to 20,000. That's a straight 20% increase. And this is where we are today. And the DAX is actually making even higher levels. It's in an uptrend. The question is whether Germany on its own can really take the European mess and pull the rest of Europe out, which is going to be difficult, because you have to remember that Germany is actually a 50% export-oriented economy, and it exports a lot of its stuff to Europe. And if Europe overall doesn't do well, then Germany inevitably is going to suffer, down the road. But right now, German DAX is looking pretty okay. It's got, of course, a sort of small shooting star, a small hanging man, but overall, you wouldn't worry about it right now. Now, so that's the DAX, that's FTSE. Let's look at CAC France. So not really a great thing to look at perhaps, but if you look at it, it just shows you how different the many European economies are. So you saw DAX on one side, you saw FTSE on one side, and now you're seeing CAC, which is Paris. And you can see that it is a long way below the peak it hit in 2008 peak, right? So that was around 6,000 plus, and we are still at 4,700. So Germany is doing great. UK is back at par, but France is really, really suffering. And if you again look at French economic data, that country is, not doing well at all. And all this, whatever they're trying to do, I don't know, some months back, some of you might remember that they were trying to renegotiate the budget in France versus the European Central Bank, and austerity issues came up and all, and something got resolved, but that's a temporary band-aid. So that's a problem that is waiting to, resurface, that you need to, keep a watch out for. But having said that, the CAC has broken out, and though it has broken out, pretty nicely, there is, of course, some data missing here in the volume data. But assuming that this is more or less right, you can see that the breakout for CAC happened on good volumes. It has tested that breakout level with a test down here, and then it's now going higher. So that's definitely good. By the way, none of this is actually just academic stuff. I don't know how many of you are aware that you can invest and trade abroad. And if you, let us say, had an international trading account, and you don't need a passport, you don't need a visa, you can send out $250,000 per year, of course, as long as you have income tax returns and PAN card, without any questions, and you can invest this abroad. So if you were a global investor or a trader, you would have gone long on DAX 2 years back, and you would probably be going long on CAC now, right? And these are like positional multi-week, multi-month trades that one can actually do to get a sense of how to move your money. So just an example of global investing. Just to complete the story on this, if we, let's say, do weekly here, just to get a, so you can see nice strong weekly breakout candle plus a test plus again going back up. And if you were actually trading the CAC, which is easy to do through an ETF, let us say, then 5,000 could easily be a target. Of course, the entry point should have been around 4,600, 5,000, it's almost 10%. And then who knows, it might go back to 6,000, all depends. Can't really rule that out. So this is an international trade that you could actually do perhaps even now. The risk reward ratio is not too favorable at this point, but it will do at this, having said that. So that's Europe. Now, why I've talked about Europe is that you have a mix of economies, of a mix of economic health, and you're seeing that clearly on the indices. Now, I'm trying to put all this together to see what could the impact be on India. If, like, let's say in 2007-8, when the markets globally came down, India was still growing economically strongly. The slowdown came 2 years later, but our index also fell. So we have to keep all this in mind. So if I were to summarize as what we see here, I would say 50% in US, and it's really a dicey situation, I think, in Europe. And the big issue really is Greece, and you really need to keep red alert. Look out for that. Okay, so that is CAC. Let me show you something very interesting that some of you probably know, but some of others new for you. China, right? Why should you be worried about China? This is 2007 onwards again, and this is the Shanghai index, the SEC, right? And the peak was at around 6,000, 5,000. So yeah, around 5,900, 6,000. And even now, there is of course something missing in the data. That's okay. But China at, so there's some error in the data. So May, June, then we suddenly have Jan here. It's at 3,350. Now, the point is that how bad is China compared to the rest of the world, or for that matter compared to India or US. So you're talking about Chinese growth, but the Chinese stock market simply does not believe that. 7, 8 years after the 2008-9 crash here, the Chinese index is still at almost 40% less than its peak. That's telling you a lot, and all of you know that China is slowing down. They have excess capacity in almost every sector. And if China were to slow down, there are long-term consequences on demand for many, many commodities and raw materials in the world. And last quarter, for the first time, the Chinese economy grew by less than what the government's target was at 7.5%. It came just at 7.4%. It was probably a face-saving thing, with some data manipulation, who knows, here and there, like a lot of the foreign or the insightful folks have said. And it's possible that you're going to see further slowdowns in China. If that happens, then what happens to, let's say, price of crude oil, price of commodities, price of metals is going to be really interesting. I'm talking about multi-month time frames here. I'm not talking about next week right now. Right? We'll come to that in a little while. So just to show you how different places are very different, let's look at Hong Kong. Hong Kong, because it's not really coming up. Yeah. Right. So Hong Kong, again, maybe a better reflection of the Chinese health. So that was the peak for Hong Kong. Again, 2008, 7-8 at around 32,000, 31,000. But we are right now So all in all, a pretty mixed picture. And lastly, let's look at data issues here. Actually, all right, so it's come back to the 2007 levels, sort of, simply on the printing of money, but that's a moot point again. Where this is nowhere close to the levels Nikkei was in 1980s till mid 80s. So Japan is still struggling a lot, but could have a breakout here, and if that happens, then it'll be a positive for the rest of the world. But you must understand that all this is happening simply on the basis of money being printed and flooded into the system. All right. So that is what we have on the global market. So it's a mixed bag. I was looking for anything which is particularly strong cues that could happen for India, but there are none. So the thing is now, the global market, except for a crisis somewhere, is not going to really impact India significantly. So sometimes you'll see all the global markets move up in sync or down in sync, and then you have to give that more importance rather than local factors. All right. So let's now come to the Indian markets and see how we are doing. Right. So back to where is that? So back to Nifty, this is the multi-year chart. I don't think I need to spend too much time on this. So going back, this is the Nifty, and what we need to keep in mind is certain levels. So you probably potentially have, so this is a weekly chart, remember. So this week is over. And some of you will recognize the pattern that you're seeing right here, and we possibly have evening star formation on our weekly chart, right? So if this is true, we still don't have confirmation. Let me, right? So we still don't have confirmation because you need the confirmation candle to actually go below, the opening of this ideally. But this is tentatively a evening star that you have, and you can see that the volumes this week have been a little bit on the higher side. So should this actually break down and should we reverse? We have already reversed, mind you. If I go back to daily, on a daily basis, we are definitely on a down move, and if I were to make this an intraday chart, you'd actually see the downtrend intraday. I just won't do that right now. and we are going to test this 8600 levels. I'm a strong believer in support and resistance concepts, and it tends to, in my experience, hold out quite well. So we haven't really come there. Okay, at best maybe we have come to the upper zone of this right now, and we are still, in my opinion, to come to the lower levels at 8600. So I expect that to happen sometime next week, right? All right. So there's a message from Investar Support saying that they will work on those data issues for the global indices. Great. I mean, I found the support really, really top notch and great and responsive. Thank you. I mean, that will really be great. So the Nifty 8600, I would think, is something that at the minimum it has to come to. This is again the daily chart with the standard setting of the indicators. RSI and MACD have not made any changes. And you can see that there is absolutely no strength in the indicators either. All right, there's no divergence. There is no, if there is anything, it's all becoming more weak. So that is what you would expect. As a matter of fact, any bounce intraday on the Nifty at this point should probably be taken as a shorting opportunity. Right. So that's the overall Nifty view, that we are probably going to go down, not up on this. Okay, so now let's just look at the various indices that we have in the sector indices. So let me actually put this down, I think.
Dr. Musa?
Yeah, sure, go ahead.
There are some questions, so I'll just I don't know if you can see the questions pane, but I'll just talk.
Yeah, no, I don't see any questions. So yeah, go ahead.
Okay, I'll just so first question was from Ravi. He's asking if you could give your views on FII moving very large volumes with very low net effect. How best to interpret what is going on there? I don't know what
okay, yeah. So the question is about FIs doing large volumes and no net effect. Okay, so first of all, I don't have FI data here, so ideally I would like to see that data in front of me before I said anything. But I just like to say this about FIs. Overall, a lot of noise is made about what FIs are doing, and I'm not saying that is bad. It has some merit. But there's something that people tend to forget in my experience, which is you don't really know what the FI is doing. When you're talking about volumes, are you talking about spot volumes? So if you're looking at spot volumes only, I don't know if somebody can send me, I don't want to spend too much time hunting for it. There's an NFC link which talks about what FIs are doing on a daily basis. The thing is that most people are looking at spot, bulk trades, all that on the FII side. But you have to understand that FIs use derivatives not so much for speculation, but they use them for hedging purposes. All right. So it is completely fine that the FI, let's say, is selling on the spot side, or perhaps not even selling on the spot side, but has bought a lot of puts or has sold a lot of calls. They could be doing that. I think interpreting FI data is not as simple as the media makes it out to be. You need to look at FI data from the spot market, you need to look at FI data from the futures market, and the NFC gives you data both on the long and short side, though they don't tell you on what specific instruments they're long or short, but they do give you gross and net levels. And then you need to look at both long and short positions on the calls and the puts, and the FI gives you that also. Right? Now, it's next to impossible, I think, for lay people like us to put all that together and really, figure it out. What I'm saying is FIs could move a lot and nothing could happen, and they could just be creating hedges, number one. Number two, I think this is something that we will see in the webinar a little, maybe half an hour, within the next half an hour, is possibly that the FIs are doing a lot of sector rotation, that they're moving money out of a set of stocks to get into another set of stocks. Is it possible that FIs, for example, have been selling banks but have been, let's say, buying capital goods and infra? Quite possible. If you actually went down and drilled down to data like that, you would probably get some insight. But at this point, I think just from a superficial perspective, to say anything more than that on FIs it's just pure speculation, nothing else. You have to drill down and get the data. I'm a strong believer in support any view that one has with data. Otherwise, everybody has the right to have a view, but if you want to seriously make money, then back it up with data and analytics. Right? Great. So I hope that answered that question. Anything else? Manchu? If in the meantime somebody just sends that NSE link of where we can get that FI trading activity.
Yeah, hello, can you hear me?
Yeah. Yes.
Yeah, so I think Ravi's just SMS'd you the link. He's mentioned it in the questions pane. He's SMS'd to Dr. Musa, that's what he's saying here. So,
okay.
Yeah, so anyways,
I have the data. Fine. I got an SMS from Ravi with the data. No, I'm looking for the link, the NSE link.
Okay,
right?
Okay.
Because then I can put it up here. We can put up on the webinar and maybe we can discuss it a little bit, right?
Okay. I'll try to hunt that around. Meanwhile, the second question is how would the yuan currency devaluation change the Chinese picture?
Okay, so there's been some very interesting. Okay, let's just put this down. So we've discussed FII activity, yuan revaluation. Let's put it that way. So I think I really don't know if anybody really knows what the Chinese are doing, right? And I'm not an expert on this hardly, and I'm just speculating as much as anybody else is. And I'm just saying this on the basis of reports I read, and I tend to read a little bit of the deeper stuff and research. So I'm just pulling things from there. So you have US, which did its quantitative easing over the last 4 years, and its economy is back in shape. You have Europe, which is now attempting to do that big time with the 1.3 trillion euro, thing, $80 billion per month that we're going to buy of government bonds, starting next month, I think. So their quantitative easing is starting. You have Japan, which started its quantitative easing last year with Abenomics, and the yuan depreciated. The yen depreciated, and the Nikkei went up. And now it's the last big economy, which is China, which has actually been slowing down, and it's now below the government at expected 7.5% and expected to slow down more. And what does China now do in terms of slowing growth? Will they pump the Chinese economy with more money? The Chinese central bank actually cut their statutory liquidity ratio, that's not what they call it there, by about I think 0.25% or 0.5% last week. All right, and that is something that is going to push some money into the market. But the big question is, will that boost the economy? Now, if China also starts to say print currency, and the Chinese renminbi or yuan, instead of becoming stronger, becomes weaker, because it seems to be all a question of competitive devaluation now, then where do we go? This is the first time this has ever happened in the whole world. There is no precedent to it to look back in history and say this is what we can expect. So we've got a situation here where everybody is just talking whatever they can, and I'm also doing the same thing right now. So my take is very simple. I would rather, and I'd be very, very careful this year, and probably in the next 2-3 years, before this whole, man-created, central banking created mess sorts itself out. I have no clue which way it is going to go. So you know what I'm doing? I'm doing something very simple. I'm doing what the chart tells me to do. If the chart tells me trends are up, buy, I'll buy. If the chart tells me trends are down, sell, I'll sell. I think this is the time when technical analysis is really going to shine in the months and years ahead. Because, look, listen, we can do a lot of talking today. What's the bottom line? The bottom line is you want to make money, I want to make money. And as long as that happens, honestly, you're not bothered about your neighbor or what happens to anybody else in this world, right? So I want to, drill down to that level, and let's say, let's protect our interests, let's protect our bank sheets. And, as long as we are fine, we'll somehow figure a way out when the crisis comes. Will the crisis come? What sort of crisis will come? I have absolutely no clue. So how would the yuan currency devaluation? The question is, will there be a devaluation in the first place? Because yuan over the last few months has actually appreciated, not devaluated. The Chinese government has allowed that appreciation to happen. Will China's government and central bank now step in and stop this appreciation and cause a devaluation? We don't know. So let's I think just make this out and then see how that goes. Okay, next.
Yeah, actually I have assigned you the questions. You just you can
Okay, fine.
yeah.
Okay.
I just figured that out. So
Okay, got it. No. This is it's a trial for all of us, I think. Wait, I didn't get the next question. Bank Nifty 40% is okay. I think you're talking about the weightage, correct? So the weightage on the bank stocks have a 40% weightage on the Nifty. Yeah, that's true. So that's one of the reasons why the Nifty is falling, because the banks have been falling left, right, and center, as you know, not just small amounts, 5-10% a day, especially the PSU banks. So naturally, the Nifty is also going to get dragged down. The thing is, with the this is what I'd mentioned, the provisioning by the PSU bank is having to get to us. I think SBI result is not yet out, and that's one of the big daddy. We're going to really have to see. Does somebody know when the SBI result is? Because analyze which chart? The Bank Nifty? Yeah, actually let's do that, right? So if the Bank Nifty goes down, yes, it's going to have a big issue on how the Nifty itself behaves. Okay, Anthony has posted a link here. Let me see if I can get it up. No, can you post it in a chat box, Anthony, because I'm not able to capture it from the question. All right. Okay. Let me just put the Bank Nifty up. Right. So while we're discussing this, all right. Right, so you can see the Bank Nifty, and if I make this a weekly chart, I think you'll see a proper evening star on this, right? This is a really strong one. Okay, so Bank Nifty, I think, takes the cake. I mean, it's got a really strong reversal, a much stronger reversal than the Nifty itself. I would come back to the support resistance lines in a while. You've seen I'm not a great follower of indicators. I just use them superficially, but clearly the indicators have RSI, of course, the proper 14-day standard RSI, MACD, or standard numbers. The MACD doing a negative crossover, never a good sign, right? It could cross over back, but at this point, I think you just have to sort of wait it out and see what happens. But with the fundamental and technical picture that we are seeing, it would definitely be amazing turnaround for the bank sector to actually go up. So you have an evening star on a weekly side. Let me put this back to daily, and you can see that very clearly that all right, so this is zoomed in, and there is really no hope as far as I'm concerned. The earlier version was a weekly thing. This is a daily thing, and the MACD has crossed over. I'm not sure about the volume data here because it's all uniform, so I'll not comment on it. But you had a very nice shooting star, almost a gravestone doji actually. Very strong, red candles. And actually, if you look at individual bank stocks, you will see that there's been a high volume selling on a lot of the bank stocks. So I don't think the banks are going to recover, very quickly. So that's as far as the banks are concerned. The Bank Nifty is at 18,800, a very important support level. I don't know when the SBI result is, but watch out for that, and that is going to really trigger, I think, the next wave of either a down move or up move. But you have something like Bank of Baroda, Punjab National Bank, Bank of India, some of the largest banks after SBI declaring bad stuff. I don't see how SBI is going to declare any good stuff at all, right? So there is possibly a significant risk in my opinion right now, and I would not be in any hurry to buy any bank, except there are some mid-cap to select large-cap banks which are doing extremely well on the long side. But if the market were to correct, then remember, everything will come down, right? So that's the Bank Nifty, and I would think that the Bank Nifty, once it breaks below 18,800 or let's get another number here, somewhere around that number, 18,450, then I think 17,700 is a very distinct possibility. So if anything, one should be looking at shorting opportunities in banks. And even if you look, right on top, Nifty was down 0.6%, but the bank Nifty was down 1.4%. So banks definitely not the thing to be in at this point. To expand on that, my screen is stuck. Can you see my screen? I mean,
yeah, we can see your screen, but for a moment we were not able to hear you. So
okay. So I think the questions are over. Is there any other question?
I just assigned something else also. And I think I've made, I just figured out that I could also make you an organizer, which I've done that now. So just see if that helps. There should be a small question mark at the, on the, which indicate that there are some questions asked. But I'm still.
Yeah, no, I think, no, I'm not seeing any. Yeah, I saw that. As far as I can see, there's really nothing else. So let me move on. And I hope the recording is going on. I have to confirm.
Yeah, it is. There's one more question about one more thing of 7-year US market cycle of Shamista year 2015.
Yeah, I saw that, but I'm not exactly sure what that is. So if that can, yeah, if somebody can expand on that, I'd be happy to respond to that. Okay. So we have the bank. So now we're coming to individual sectors. So that's what I want to do. I want to look at individual sectors. So clearly, if we were to put that here, then banks are weak. All right. So that's the bank Nifty. Let me put. Let's see if we have the PSU bank index here. Yeah. All right. No, where is the PSU bank index? It's, what is it called? CNX. I'm forgetting the formal name. Right. CNX PSU bank. Right, so watch how many red candles this has. This is the CNX PSU bank index, right? It is clearly worse than the bank Nifty that we just saw a moment back. And if you look at it, this has broken even more support levels. This is looking even more dangerous than the PSU, sorry, the overall banks. So this tells you one thing very, very clearly, right? That the public sector banks are behaving very different from the private sector banks. The bank Nifty is a mix of both. This one is only PSU banks, and I've made it weekly chart. I hope the screen is refreshing at your end, and you can see how strong the downturn on the PSU bank stocks are. I would not want to hold any PSU bank stock in my portfolio at all. I mean, the selling should have actually happened earlier. Yeah, that's what I'm saying is if you were holding it, you should have sold it earlier. And I'll just go back to daily just to tell you when that should have been done. I will zoom in, and when this big red candle happened and the support at 4,100 was broken, that was the time to definitely get out. Because after that, from 4,100 we got to 3,700. That's another 400 points drop. You lost another 10% on your PSU bank holding overall. Okay, so technically this was a very good time to exit. Should you exit now, right? So it's very nice to talk about the past, but that's time gone by, and it makes no difference to the present. You just have to learn lessons and move on. So where are we today? We are there, as you can see, at a sort of support zone. Question is, will this support zone hold or not? It is a fairly important support zone. But if that breaks, then 3,400, that's another 10% almost from where we are here, is a very distinct possibility. So if I were holding any public sector banks, I would be putting stop loss exit orders on my spot portfolios on the PSU banks. And those of you who are comfortable doing derivative trades, you would be going short on PSU bank. Definitely if there's a bounce, right, and a bounce, let's say, to about 3,900 on I really wish the PSU Bank was a traded index like the Bank Nifty is. Unfortunately, it's not. Wonderful money-making opportunities. And absolutely no strength on the standard indicator that we have. Only thing is you have sort of, spinning top, doji type candle here. But very often in a downtrend, in a strong downtrend like this is more a question of a pause before a further fall rather than a reversal. So, don't get too excited about going long on PSU banks. So that's one segment of the market which is clearly weak. The RBI policy which came out, I think, 2nd or 3rd of Feb, they didn't do anything except decrease the SLR rate by a little bit. That allows more money to come into the system. But they already had cut the interest rate by a 1/4 percentage point, as we already know. But there was nothing really more than that. It's now over to the budget. It's now over to the government to do whatever it needs to do before RBI will take up any further steps. And with the strong provisioning for NPAs the PSU banks have, then it's really not good news at all. So in spite of a sort of economy which is said to be recovering, India's, why are we having such high provisioning? That's the question that we have to ask. So just for others, by the way, in case you don't know, provisioning is, when banks keep aside some money to take care of any bad loans that they may have to write off because the borrower can't pay, right? So that's on the fundamental side. Okay, so that is the bank thing, and we've finished that. So let's look at we already okay. I need to do things a little faster unless you guys want to stay much longer. I am happy to do that. So this is the auto index, right? So the auto index, as you can clearly see, has also turned around. The last red candle that you see here, led by Tata Motors results, which were, I don't know, everybody can have an opinion, below market expectations at the very least, and that too with a gap down. So that tells you that the selling is pretty strong. And if we put a trend line, even all the way from 2014, and if I were to take this, then I really have to stretch things to make this trend line fit. And as you can see, this trend line is clearly under threat. So I'm just trying to see if I can somehow make the trend line not break the trend, but that's manipulation. This would be the best fit, as a matter of fact, right, from a 1-year perspective. And if I zoomed in, then any shorter term trend line that you may have, let's say that one, has also been broken. So whether you look at a multi-week, multi-month scenario, stocks are definitely now a bad thing to be sitting in. They should also have been sold. And if you all this together here, let me go to daily, weekly. You see an evening star formation on the banking, auto stocks, which is with a strong reversal. So that's another sector that's bearish. Next, we have, just looking at it in alphabetical order, let's look at CNX Energy. Let me just make this whole thing bigger. Right. So CNX Energy actually quite interesting because it has started to show some strength. So if you take the whole index, but all these, NSE indices, especially the new ones, are only from 2010, 2011. They don't even go back to 2008. So NSE itself should actually do something to fix this, because ideally you want data from there. Now, what you have here on the energy side is that it came to a support level here at around 8,100, 8,500. A lot of lower shadows, and then started to move up. And then what happened is that it has taken support at 8,500, as you can clearly see, and started to trend up, but not on very strong volumes, not volumes, or very strong candles yet. So this could be a bounce, and this bounce is primarily on the fact that crude oil has actually bounced up, as most of us would know. And therefore, stocks like ONGC, OIL, Oil India Limited, and Kane have gone up a little bit, and that's the reason why this has gone up. And of course, some BPCL, I think, just shot up the other day. And this is the bullishness. Now, here's something that you have to keep in mind. If crude oil, this is the CNX energy index and the BSE oil and gas index are, let me get that if I can. I think that has longer history. Yeah, sorry, BSE oil and gas index, right? Okay, so let me. Yes, this is much longer, right? So you can see, this is the advantages of having more history. So you don't have on the CNX, but on BSE you can clearly see this, that we are now, we've done that bounce, and you can see this weak climb which is there. And what I'm saying is that a lot of this, if you go and look at the composition of the index, is on account of both the oil marketing companies, which benefit from lower crude oil, but also offset by ONGC, Kane, OIL, which are the heavyweights of oil and gas production, who suffer a loss, or a loss of profit at least, from lower crude oil. So you have this offsetting thing that is happening in the oil and gas index. Now, the oil price, which has bounced, for now you can't say the downtrend is over in terms of crude oil. And if crude oil were to go down again, then oil and gas will go down. Within that, BPC and HPCL could probably go up, but ONGC and Kane would probably go down. So be careful, and notice one thing, again, the magic of technical analysis. This was the support line I put here using the lows of these candles, and that's 10,403. And look at today's candle. The high is at 10,408. All right, and just tells you. So we could be we are not could be. We are at a resistance zone on oil and gas. Now, will it break out? Only time will tell. But I would be very cautious, and I would look at additional confirmation which say this short-term downtrend line, because you've got lower tops, lower bottoms here, and let this break out, then maybe I would consider going long. But at this point, it might just be a case of a bounce before oil and gas also goes back down. So that's one thing. Let's look at a very different index like our BSE FMCG index. I'm going to BSE indices now because mostly they have a much longer history than our CNX indices, right? Okay, so again, going back to the long term, you can see that the FMCG space has been doing extremely well multi-year. This is a chart from 2005, 10-year chart, and in the last few years it's done amazingly well. And if I zoom in here, you can see that FMCG is still actually not trended down at all, and we definitely have an uptrend that is there. Having said that, there is a divergence. So, oops, there is a trend line. Yeah. All right. So that is one, and what you have in, say, RSI, okay, is you don't have, sorry, wrong thing to put, I wanted to remove that, is you have this, that mistake, you have that, right? So what do you notice? You've got higher tops on the stock index, on the index, FMCG index, but you have a lower top on the RSI. Having said that, the MACD itself is quite strong. MACD is showing a whole deal of strength, and it would be premature right now to jump out of FMCG as a group, but this is exactly how reversals, form in a small stepwise. RSI is showing some weakness. There's a negative divergence there. It is not yet time to sell FMCG, but it is not a good time to buy at all. You would not look at creating fresh positions. You would look at maybe selling out existing positions, putting stop loss orders on that, and watching for, let's say, a break below 7,600, 7,650 to jump out of our FMCG stocks also. All right. Until and unless there is something that happens that triggers the indicators to give you reason for it to go up. Right. Normally, technical analysis would say you should buy life highs, and that is what you could do here because we are almost at life highs. But there are times when the risk is not justified and the risk is a little too high. And those of us who know candlesticks, we're looking at a hanging man today's candle. So the caution would be strongly advised on the FMCG side. So let's actually, I forgot to put this. So banks are weak, autos have reversed. Okay, FMCG, bulls are weak, but no reversal yet. Okay, possible is the question. Oil and gas, let's say 50-50 split, no opinion. You don't have to have an opinion on everything, by the way. That's something that a lot of times is perfectly fine in the market to say I don't know. Let the market give me more news, more info, more insight, then we will see. Okay, then what's the next major sector? Let's look at IT. I think that's the one which has been doing really well. So you have the IT index, and I think some of the IT stocks have been making life highs, Infosys if I'm not wrong. And just look at it, amazing. All right, so IT is just going up and up and up. This is, by the way, on a weekly chart, again a 10-year chart, amazing, wonderful. All right, you have that there, a good support. Let me zoom in. Okay, so you can see that IT is going up with pretty strong candles. Having said that, again, there is a warning signal here, which is you're connecting the higher tops, and when you connect the RSI, when you connect the RSI, you are getting a clear negative divergence, right? This can happen, right, in a strong bull market, but you will normally see that happening more in a sideways trend. When you're getting clear higher tops, but you're not getting that on, what do you say, the RSI indicator, and actually on this, you are also not getting a higher top. You're actually getting a downslope on MACD. Now, I have not read anywhere, at least so far, and if you have a reference, I would love to get that from any of you, of divergences on MACD. But the concept of divergence can really be applied anywhere. It really doesn't matter. So it's absolutely fine. And if both your MACD and RSI are showing you divergence, then it's good to be cautious. This is a time when it's good to be cautious in the market rather than be jumping in, all over the place. So IT stocks still showing strength. Maybe for short-term nimble traders, that's the place to go long on and find the opportunities. I'm sure you'll make money. Definitely no shorting. You can short the PSU banks, you can short autos, and maybe look at shorting oil and gas sometime later, but you definitely are not going to short IT stocks, right? But if the time comes, and maybe you'll even take some short-term as in multi-day, 2-3 week long positions, bullish positions on the IT side. So if we have saving grace today, then it's the IT stocks showing bullish trend, but with negative divergence. All right, so that is our IT side. then let's look at what's the next big thing that we have. Let's look at metals, and let's look at BSE metals. Okay, so the metal index has corrected in the last this is a weekly chart, remember, right? So the metal index on a weekly basis is still in a downtrend. So clearly, I don't think there should be any confusion at all here right now that this is a weekly downtrend. And when you get a weekly downtrend, you don't take foolish short-term long positions at this point. Always stay on the side of the trend. You've heard that said so many times. This is what it means. So we have a weekly downtrend, and if we look at the long term, then the metal stocks are as a group significantly lower than their bull market peak of 2008. However, what is important to note is at the level we are at right now, at around 10,000 on the metal index, it is a multi-year support level, right? So let's put that down. Metals at multi-year support, right? And that is something important. The question is, will this now provide enough support for metals to bounce off that? And right now, it's too early a question to answer. Let's look at daily, and let me zoom in. Right, and what you can see is this is the same downtrend line. We can maybe a little more accuracy now, and zoom in a little bit more. All right, so we've got a sort of triple bottom here. There's a bottom here, there's a bottom here, and there's a potential bottom that is being formed here, though it's too early to say. So I would be neutral on metals at this point. I'm not saying you should buy them, you should not short them, you should just wait and watch, right? And that's a lot of the stuff that you have to do in the market, just wait and watch for a strong signal to come. If the metal index were to break below, say, 9,900, that would be a shorting opportunity. On the other hand, if the metal index were to go above 10,400, 10,450, then definitely some metal stocks should be bought. Now, which ones we'll have to drill out and see. But the metal index is at a potential strong multi-year support. It's neither a short, it's neither a long, it's a potential buy is all I will say. And the reason I'm saying it's a potential buy is not for technical reasons, but for non-technical reasons. And those non-technical reasons are basically, number one, that I think as of now, the Modi government has been doing a lot to try and revive the economy, trying to get foreign investment in, etc. And there is this now big hope that India could grow, but China may not. We have, lesser crude oil prices. That's great for our fiscal deficit. It's good for the overall economy. There are some indications that the economy is going to start doing better. You have a lot of cleaning up that's been going on with the coal allocation, the power sector reform, with interest rates becoming cheaper. And it is quite possible that even if we grow 1% faster than we have, so we are at around maybe 5.5% GDP growth, even if we do 6.5%, 7%, which the IMF is expecting by 2017, then not 16, 17, then metals is one place where significant growth will happen. Because there's going to be a revitalization of the economy, growth will happen, and of course metals are a core requirement of that. So that is something to look at from a portfolio construction perspective, that you may want to start building your portfolios with more metal. Definitely, I mean, sell banks, buy metals is a potential strategy for the next few months. Don't do this. This is not for tomorrow, day after. You need more evidence. But maybe by the time the budget is out, and depending on what policies get announced, etc., you could see a revival in the economy, and then we will have to review things there. All right. One more thing that is of interest in, let me see if it is there on weekly actually. Okay, so on weekly, so what I was looking for was any indication of strength on the indicators. So there's no indication of strength according to me of any significance on the weekly chart, but on the daily chart, right, you can clearly see, again let me zoom in, yeah, right, you can see that you actually this is not divergence which is still in play, right? But this would be a positive divergence, right? Why is it not a divergence which is still in play? Because you don't have a lower low on the index right now, right? You had a lower low here with a higher high on the RSI, and that's a positive divergence. Here you don't have that, so that's why I said it's not in play. Having said that, these sort of strengths are building up internally in the metal space is all I'm wanting to say. And that's the reason why you want to be a little bit biased on the long side. That's it, right? So that is so with bullish bias. I want to emphasize the word bias. And then let's look at BSc Infra. Oh, no, what is it called? It's called something, right? Yeah, BS. No, that is. Okay, let's look at capital goods. We'll come back to infra. Right. So if you look at capital goods, and again let's zoom out. Let's go to weekly. What you'll see on the capital goods space is that this is perhaps an important support resistance zone, and in the last few days the capital good index has clearly broken out of that zone. All right, it made multiple attempts in June, July last year, failed to do that, made an attempt in December, but got reversed. So you had multiple evening stars happening at a resistance zone, and now it has gone up again. So this is a short-term thing. Okay, you can't really see this here. Let me zoom out and see if I can get it. Okay. So that would be, let's say, the highest resistance point. And what is now happening is that the I wanted to once. Yeah. Okay. Right. Is that the capital good index after doing the breakout, all right? So the breakout happened in this quite healthy one, went sideways, consolidated, has now reversed, and it is my opinion that this is an opportunity to perhaps start accumulating some capital goods stocks. I think the economy might be shifting from retail-oriented growth with things like FMCG and autos and things like that to a possible capex-led investment cycle, wherein the capital goods and core functions that retail people like us don't really understand. So we're talking about capital goods, we're talking about cement, we're talking about metal, we're talking about infrastructure, we're talking about commercial vehicles, we're talking about earth-moving machinery. Things like that would perhaps, in my opinion, start to dominate the investment theme for the months and years to come. And I say years, next 2-3 years. And it is it's a distinct possibility that these are now opportunities to actually get into those sectors with these corrections. Now, if we have the time, we will definitely look at some of the individual stocks, but we can't do that with the index because one, I was looking for volumes but index volume is very hard to read, and we will look at some of the individual stocks in the strong indices that we have, so that maybe we can find some opportunities in real time for the next few days, weeks, etc. So capital goods breakout, let's keep a note on that. With which is now being tested and the question is an opportunity to buy. Now, why all these questions for metals and all of that is that the overall sentiment whether you're looking at global sentiment or Nifty in India, is bearish. So you have these indices which are showing strength, but they're not immediate buys. If and not if actually, when the overall index, that's the Nifty and the broad market, starts to bottom out and show strength, these would be the spaces to actually get into and start looking at accumulating those stocks on your portfolio. So I hope that's making sense. All right. 1 second. All right. Okay, some questions were coming in, but that screen got I don't know, disappeared. So I'm looking at the questions again, and Rajesh is asking, commodity prices are correcting. How is it to buy now? Their balance sheet will be hit. You're talking about commodity prices correcting and buying metal stocks. Is that what you're referring to, Rajesh? Right. Yeah. Okay. So commodity prices correcting is good for metal companies, right? Because it's an input cost for them. Their raw material input costs are coming down. Their output costs, prices, question is, will they also come down, and by how much? And typically, at least in the beginning, the companies will not reduce their end price as much as the input price comes down, right? All companies want to make more profit. So the question is, will they reduce their margins, or will their margins actually increase even without having to reduce their price? So profitability might actually go up. And that's the reason metal stocks might do well. So commodity stocks may not do well, but the metal processing companies like Tata Steel, Jindal, Steel Authority of India, JSW Steel, Hindalco, the likes would perhaps start to do better in the quarters ahead, right? So that's the thing. So price change it's a two-edged sword. So crude oil has come down great for India, but the whole of Middle East is basically crying now. What do they do with less revenues? And they're going to make half of the money that they were trying to make. Venezuela is in a huge crisis because of falling crude oil prices. So there's always somebody who's crying and somebody who's laughing at the same time. And you've got to figure out on which side of the story you are. So if you are a commodity trader, you'll probably be short on metals for the last 3-4 months. But if you are an equity investor, you probably start looking for the exact same reasons to buy, metal stocks and say, I'm going to hold them for a couple of, at least not couple, a few quarters down the road, right? Yeah, all right. So let's move on. So metals, capital goods, and now let's look at realty. I think, yeah, BSE doesn't have a good realty index. Okay, so realty is interesting because we all know that realty has been doing extremely bad, and you've got to get perspective on this. A realty index in 2010, sorry, this is I thought 2008, was at 500, and it's way below the peak of 2008, and it's come down to 150. We are now at maybe I take that down. Okay, yeah, let's look at the more immediate. Okay, so we are now in a sort of support resistance zone with as far as the realty index is concerned. And if I make this weekly, a lot more clarity, and what you see is that the realty index has a nice double bottom, in a sense, there, has broken out of this resistance double bottom neckline, in a sense, to speak of. And let me zoom in, and what you will see is this is a weekly chart, just to so that everybody knows this. You have a pretty small red weekly candle, which is suggesting that if you look at the bank stocks, if you look at the auto stocks or these indices, you saw major reversals. Here you're not seeing that, you're actually seeing strength. And the reality is another space that I think one should start looking at, picking up stocks. So you have reality which has bottomed out from a multi-year low, and possibly setting itself up for an uptrend. Okay, I just saying possibly because the proof is still to be there on the charts. If you go to daily, right, so you can see, you know, strong moves up. It went to the resistance of 240, corrected, may come down to 220, 225, and that will be a good time to buy. Not the best of trend lines if you follow Doe theory, but that's the, you know, tentative trend line like right now. Let me just put it that way. I don't think it's going to come down here, and with things like interest rates getting cut slowly, SLR that is being cut by the RBI, then more money in the system, things could happen. So Ravi has asked a question about realty companies are highly over leveraged. Is that factor to be kept in mind? Absolutely yes, but at the same time there are far significantly less leverage than they were even 1 year back. So if you look at the number of realty transactions in the last 1 year and over the last 3 years, in the amount of deleveraging that IT companies have, right, have done, then there is definitely a significant thing on the balance sheet. DLF, for example, has sold off some major properties for thousands of crores and used that proceeds to pay off debt. And what's a clear indication of that is their interest costs are coming down. The fact that interest rates are coming down is a good thing for realty companies. And you are in an environment where possibly, at the very least, we could say that interest rates are not going to go up unless there's a global economic crisis, which none of us can predict. And you have a hopefully healthier economy in the quarters ahead. With all that said, realty not to be looked at from a retail perspective, but from a commercial perspective. And there is going to be, I think, more FDI coming in. I think there's going to be more, not FII, FDI coming into India in the days ahead. This whole Make in India, branding awareness that is going on, and probably some very strong policy being made around that front, like FDI into railways, etc. Reality not just from residential but from commercial, from SEZs, from township developments, from an overlap with, say, infrastructure, all that if you keep in mind, then I think from a fundamental perspective we could be looking at reality at a potential bottom. And maybe 1 or 2 years later, if you're going to review this webinar, we're going to say, you know what, perhaps we discussed this then, and some of us didn't buy, are probably going to say, we missed the boat. So I think from a fundamental perspective, I would really look at saying that it's perhaps definitely a need to look at it. And there's one more thing, which is the REITs that have been enabled in India, but there's still clarity on the taxation side that's required. And once that happens, then money will flow into REITs from the domestic side in India. So Ravi has mentioned about PE funds moving into reality, yes, but domestic money actually hasn't moved into reality as an investment vehicle. It's moved only into people buying houses, but that's not really investment. That's end-use consumption, which you really need. And the whole trend towards economic housing. How many ads do you see nowadays about 25 lakh apartments, 40 lakh apartments, sub 50 lakh apartments? There are like literally hundreds of projects coming up. I don't know how they're doing. I'm not a real estate expert at all, but I think it gives you a sense of what's going on in the market. So I am inclined to be positive about the prospect of reality stocks in the days ahead. Right. So that's my opinion on reality from a fundamental perspective. Right. So from a technical perspective, just note that in 2013, 2014, this strong bottoming out. You had this bottom in 2012, and then it has actually shown higher tops, higher bottoms. This downtrend, which is there, has clearly been broken, and you're getting some clear strength, I think, in the indicators also, in my opinion. Let's go back to weekly. And what you see in the weekly chart is, I like to see from a if I have an investment mindset, then I'd definitely like to see something like what I see on the MACD right here, right? A sort of base forming in MACD, internal strength building up, and that takes weeks to show up on charts sometimes, right? I'm not sure what the question Rajesh asking is US reality affect Indian reality? Okay, so does what happened in the US real estate space affect the Indian real estate space? I don't think so. That's my personal opinion, and please, anybody has a different point of view, we'd love to discuss that. I think the US market is an extremely different market. It's almost like a different industry. In US, if you look at it, the real estate side has actually been improving. Prices have been going up over the last 3-4 years. There have been better jobs. The economy is getting healthier, and real estate prices overall have bottomed out in the US, that's for sure. And in many places are going up steadily at around 3, 4, 5%. A bubble in reality in the US right now, no, I don't think so. I think they're going to be very careful at this point, right? So Ravi is saying if somebody wants to buy real estate in the US, just for your information, Shibu, the ex-promoter of Infosys, has 300 apartments in the US, mostly in the California and the Seattle area, which are all rented out to executives from companies like Microsoft and Amazon. So the wealthy guys in India have already done that. Whether we people, and I'm just one small guy, can invest in the US, I don't know. We'll have to be really, really careful. But yeah, prices definitely from a historical perspective are attractive. Send us that Bloomberg link, Rajesh. I mean, if you're talking about a bubble in the American realty space, I don't know. It could be, but I haven't come across any data to that effect at this point, right? If you look at housing starts and construction, it seems to be improving. At least the Americans don't do things like the Chinese, where they build ghost towns and ghost cities. It's a market-driven economy, and it's not central planning, and it's fine. You can do that, right? Okay, so reality is a space to look at. So we had metal, we had capital goods, we had reality. Is there any index that I have missed? Let me see. IT, PSU, reality, FMCG, metals. Yeah, I think that's it. So if we come back to this, then basically you have banks, autos, oil and gas. Let me move IT, oil and gas separately. So the biggest heavyweight in the Nifty, which is the banks, clearly are weak. The autos have reversed, which is also a big chunk in Nifty. And the FMCG is showing, weakness. Oh yeah, pharma. How could I miss that? Thank you, Asha. PSC. Oh yeah, this is the other one. Power. Power index, which is also showing strength actually. Don't look at the last candle. Let's get some perspective. So again, this is the BSE power index right from 2009. All right, so again, we don't have the Li-Fi data on this. And we had this major correction. This is a weekly chart again, please keep in mind. So we are looking at long-term trends, and by any standard that any long-term downtrend line that you want, and we can debate about which line is correct and all that at some other time, but put any long-term downtrend line you want, and it has been broken out. All right, and what you now have is this very strong re-rating almost of the power side, a consolidation of sorts that's happened, a double bottom that has happened, and now we have this. All right, and what you see here is a big re-rating that I spoke about from around 1500 to 2200 levels, mostly on account of government policy, the coal scam that happened, and there's going to be now auction. I think that's happening sometime this month, right? And then you have this consolidation, okay, and then you have this sort of double bottom. Rajesh says that if Kejriwal comes to power, then all the power stocks will get hit. Yeah, I agree. I think from a sentiment perspective, they will get hit, but I think this time Kejriwal has hopefully learned his lesson of not doing, antiques and all of that. And they will, AAP will want to really consolidate things at this point if they do come to power. So I don't think Kejriwal is going to be as moronic as he has been earlier. Hopefully he's going to think long term and do things better. So let's see. But that's if Kejriwal comes to power, which at this point, at least the surveys feel that it's a pretty long shot, right? So yeah, we can only hope, Ravi, you're right. Right. So let's wait for Monday. Let's not preempt things. Let's wait for Monday, Tuesday. If Investar wants to have a review at that time, maybe we'll do that. And Rajesh is saying chain effect on other states. I'm not so so pessimistic on the future right now. I think there's a lot of stuff. You have to keep in mind 1 year from now GST has to happen. That means a lot of consolidation between state finances. Policies will get aligned and things like that. So if I'm a long-term investor, I would think that you're looking at a good buying opportunity in terms of power, metals, infra, realty, right? Okay. Yeah, so unless this happens, nationwide, sentimentally, yes, but let's see. I mean, let's just, maybe a good trading opportunity on Monday, Tuesday to short power stocks. But I think in the long term, they will do well. Power will consolidate. Coal will get easier to mine or availability. And we need electricity. I mean, I'm not saying this for the heck of saying it, but I'm just saying that because of what the charts are telling me. And the charts tell me that, look, you have a big, move up, and you have a double bottom. This is almost like, if, let's see, do we have monthly charts here? Oh, yeah. Okay. So for those of you who know about patterns, this is almost a cup and handle pattern, right? So you have this massive cup, maybe a double cup, or at least this is the cup, and this is the handle, right? And for those of you who know the meaning of that, you have the cup and handle pattern, and when that breaks out, then you probably get a big strong move on the long side when that happens, right? So bullish on power. I think drops should be used for buying as far as the power side is concerned, right? And this is over to 2.5 years of pattern. It's not going to just go back in 1 day, 1 week, and all, right? So until something major happens at the central government level, I don't think I'm not pessimistic at this point, right? Ravi is asking, will we do housing finance companies? Well, it's almost already 9, and we haven't started individual stocks, but there's no sector for individual, for housing finance. If there was, I would have done that. But I want to finish off the sectors first, because at least I think we'll cover a whole range of things, and then we know where to focus, and then we can spend the time looking at that. But yes, if there is time, we can definitely take requests and do housing finance and others. Okay, so power bottomed out, cup and handle on monthly. Okay, good long term. So what you see is, metals, capital goods, realty, and power, very, very, very different part of the economy compared to, your autos and retail stuff and banking and all that. So this is why I'm saying the economy is shifting into another gear. Okay, so that's power. Healthcare, let's look at that, and then I think we should look at individual stock. Where is this? Finance, realty, pharma. Okay, so this is pharma. Let me, is it the whole chart or this is monthly? Yeah. Okay, so this is pharma, and one thing dramatic in pharma at this point, and this is a weekly chart, okay, is the divergence. All right, it is the divergence, and this is a weekly chart. Please remember that. Huge negative divergence on pharma, MACD also showing weakness, and on 1 second, let me zoom out too much. So if you look at this now, hopefully you'll be able to see it better. You have the pharma stocks still showing higher tops, higher bottoms, but you have to be ready to jump ship, in my opinion, on pharma. You have on a weekly basis, sorry, on a daily basis, potential evening star which is forming, and I would jump out of pharma if it were to come below 10,000 for sure, right? So psychological number, but that's a 10-15% correction from where it is right now. Individual pharma stocks will have different stories probably, and this is weekly. Let's go to daily, right? And you can see on the daily chart now that we have, right? The last 2 weeks haven't been good, and yesterday, or rather today, has actually been very, very bearish, right? So that is something of concern. Of course, you know, when it comes to trend lines, there is one thing to keep in mind, which is it could come to this bottom trend line at around 10,800 and bounce off from that. So that's what you want to see. So a long-term investor, as in multiple weeks, will stay in pharma and see if 10,800 breaks, and if only if, let's say, 10,600 or, like I said, 10,000 breaks, then you'll get out from a long-term investor's perspective. A short-term trader would definitely now be short on pharma with a minimum target of 11,000 and then lower to 10,800. Right? So pharma is also multi-week negative divergence. So interesting space, because if you were a Nifty trader, your life is going to be tough. And the reason I say that is that you probably got 50, 60, you know, that's 50%, half the sectors weak and half the sectors strong. Of course, there is this question that the, you know, banks are so heavily weighted in the Nifty. But if you take the banks, you take the autos, you take FMCG and pharma, that's a pretty big weightage of bearish sectors in the Nifty. On the other hand, you have IT and oil, which is going up, and then you have these metals, capital goods, realty and power, which is clearly on the bullish mode from a multi-week perspective. But the weightage of this is actually not that strong. So you're going to see, I think, you know, based on announcements more by the government and stuff like that, some amount of volatility, and as a Nifty trader, your life is going to be tough. If, on the other hand, you are going to drill down and, let's say, short banks, short autos, go long on capital goods, metals, realty, power, then you're going to find much, much better, higher probability trades that you can do, which you can't do with the Nifty, of course. And unfortunately, because the markets are in our country are really not that evolved or that deep, none of the sector indices get traded except the bank Nifty. The CNX IT has pathetic trading in it. The ETFs are really not liquid. There's very, very little trading in it. So you are stuck in terms of how you can implement your views. You've got to look at individual stocks. It would have been great if it was something like the US, but that's probably under a generation away, where you have all sorts of ETFs, where you have amazing liquidity in just about every index and anything that you want to trade. And then drilling down to individual stocks is not so much of a challenge there. It's actually easier to trade there. But then, and yeah, we are here, so let's talk about India. And, you know, it's good to know, because these things will eventually happen down the road. And it would be great if a REIT had been listed, if the realty index was, you know, ETF. I would have loved to buy it. Indrajit is asking, amongst metals, capital goods, realty and power, which is the strongest according to me? Can I take that question at the end, because it's going to require some amount of analysis, and if we have time I definitely love to answer that. But that's, let me do something else. Let me just go to a different view here, and let's just put up all four of them side by side, and can I sync it? Yeah, synchronize view, right? Himanshu, just tell me if I'm doing it wrong. So we have CNX metal, we have CNX capital goods. Oops. We don't have capital goods. Okay, BSC, I think.
Should be there.
No, that's it's called something else, I think.
Yeah.
And then we have BSC power, and we have what was the other one? Realty, right? Yeah. Okay. Okay. So if I zoom one out or the other, everything since I've seen it. Yes. Thank you. Wonderful. So let me. Okay. So I mean, one of the amazing features of Investar, which I've not seen on any other software, or at least I'm again not conversing with many softwares, is this ability to do this and have all your charts move at the same time. Very easy, very nice, and good for comparing. When you get a question like this. So if we go back to however much data we have. Okay, so right. So I would say, see, one small issue here is on none of these is there. For example, CNX metal. Okay, so yeah, I just wanted to sync that. All right. So we don't have data for all these indices from 2008. That's partly because the exchanges themselves are not having these indices from all back then. So it's a little difficult to answer this question in what he has asked. So I can't be 100% sure, but I'm going to say this with the following caveat, which is if you're looking only from 2012 onwards, right? And since I don't have data before this, if I could be wrong, right? But having said that, let me put it this way. I think it comes down to an investment philosophy. If you were a person who is looking for possible underdogs, stocks that have really, really underperformed and could actually perform well in the quarters ahead, then I would take metals. Right, and the reason I would take metals is only because of this, because we are still in a downtrend on metals, right? And that's the downtrend you have. This is again, remember, a daily chart, but from 2012 onwards. If I make this weekly everywhere, yes, amazing, right? So you've got this downtrend, but you also have this multi-year support that I spoke about, and I think it's going to take support. That's now. I would do the following. If I was looking for underdogs, I would look at very carefully this time frame and watch if metals holds that support. If it does, then I would buy metals if I am a person looking at multi-year support type stuff. On the other hand, if I'm a person who believes in buying strength, and if you go by pure technicals, that's what's recommended. You just buy strength. Then I would buy capital goods today, right? And the reason is because, let me bring that in as much as I can. So capital goods is on our top right. The capital goods has broken out of a multi-year, not the 2008 peak, but a multi-year level. It is broken out of that, and it is now just correcting. And this is the one which is probably likely to move more than anything else. So I would look at capital goods in terms of speed of recovery. Reality is actually not too far back from that. So underdog number one, I would say, is metals. Then I would say reality, then power, and then capital goods from an underdog perspective. From a strength perspective, I would put capital goods first, and where was the divergence? Okay. Yeah, I would put capital goods first. I would put reality next, and then I would put power, and metals would be last, right? So I hope that answers the question for Indrajit and everybody else. Okay. All right. Rajesh is asking about a divergence in Nifty. Okay. Right. So what's the question? You're welcome, Indrajit. What's the question for divergence? Because let me just go back to, let's say, weekly on the Nifty. So you have the Nifty RSI actually going down. You have the MACD also actually going down. Not that the MACD going down itself is bad, but it shows you that the bullishness is actually coming down, right? That's all. It's not yet a time to sell from that weekly long-term perspective, but the bullishness is definitely coming down. And if you make it a daily candle, then I don't think there's anything actually there's no divergence, because things have actually already corrected, right? So both of them are showing weakness. Okay. I hope that answered that question, Rajesh, right? So let's move on in the interest of time. So we've identified, the sectors which are strong and the sectors which are weak. So just to reiterate, the strong sectors are strong sectors where you want to be building long positions. There's no hurry. You can say start an SIP in some of these metals and capital goods stocks over the next 6 months, and perhaps just jump out of banks on Monday morning, right? Not all banks. Some banks are doing well, but definitely all the PSU banks and some of the private sector banks. I would look at appropriate time to jump out of FMCG and pharma, and autos also I would have jumped out. And then what do you do with that liquidity that you create, the cash that you create? Move that into the sectors which are showing strength. And of course, you can do a lot more in-depth analysis. You can do some what is called relative strength analysis, not to be confused with relative strength index. RSI is different from relative strength analysis. You could look at doing some sort of quantitative stuff. You could look at fundamentals and get valuation data for various companies and sectors, and then figure out your risk-reward ratios, figure out your probability scenarios, and then take a more in-depth, informed answer on how to build your portfolio, what stocks to include, what not to include. Because basically the bottom line is this, we can talk about a lot of generic stuff. You want your portfolio to go up as fast as possible with the lowest risk. That's utopia, but that's exactly what the goal is, and you want to do that in a systematic, quantified, analytical approach, and then keep updating your approach and data every day, every week, or every quarter, as and what depending on your approaches, and then move your portfolio more appropriately, right? Okay, so let's take individual stocks now. Okay, let's do that. In the IMRs that I do every Friday, we tend to look at all the 50 stocks in the Nifty on one session, and then the next weekend, on next Friday, we look at all the 50 stocks on the Nifty Junior. The reason I do that, it gives a sense of continuity. It gives a sense of how the market has moved from one side to the other, or which stocks have started to become weak, which stocks have become stronger, and there is continuity. And then it's much easier to actually then focus on a smaller group of stocks and constantly reshuffle your portfolio as things change. But that's not what we're going to do today. Let's look at individual stocks. There's already a request by Ravi on housing finance, so we'll have a look at that. But before I do that, I just want to use the screeners that Investar has built in, amazing stuff. As thanks to Himanshu, he held me through a sort of private training session yesterday. Thank you so much for that. And you know, things became a little more clearer as for me as to what all we can do with that. So I just want to, you know, use that actually for partly my own benefit and see if there's something we can do. Rajesh has asked a question, if major weightage of Nifty is weak, how will other sectors push it up? Or so I think just let me rephrase that. I think what Rajesh is asking is, one of the major heavyweight sectors in the Nifty becomes weak, say the banks. How will the others? They'll also either be weak or, you know, strong, and accordingly the Nifty will move up and down. So again, just to go back, banks and autos and FMCG is weak, then there's a lot of pressure for the Nifty to go down. But on the other hand, metals, capital goods, realty are showing strength. That's the counter push, trying to get the the Nifty to go up. There's a question of who wins the game. It's a straight, simple mathematical thing. It's a tug of war, and whoever has the more what do I say, force or strength for that day, the Nifty moves that way, right? Okay, great. So let me just come to the screeners that we have, and just to, you know, keep it simple, let's look at the F&O stocks, right? And the reason I'm saying F&O stocks is because, you know, some of us, how many of you are F&O traders? Just, you know, just let me know, derivatives and futures, because then we can look at both the spot side and the long side, the spot and the F&O side, and we can look at some more complicated strategies maybe.
Dr. Musa, I'll put a poll for that. I'll just put a poll for that, okay? So that we can get a response.
Right. Okay, super. So while Himanshu is doing that, you know, I've just used the screener here, which I had already set up, and we're looking at F&O traded stocks, and I think if I'm right, then we're looking at gainers on strong volumes, right, across the whole F&O group. So I created this group here, but we could do that for, let's say, all the CNX 500. I think we had done that also. Yeah. So let me close this. So this S&P 500, CNX 500. So all the 500 stocks here ranked here according to high volume moves, right? So you can see that Bhushan Steel went up 11% on 10 times average volume, and I think if I'm right, it's 50-day moving average, right, Himanshu? The volume parameter that is used in Investar.
Yes, 50-day. So 971% means that it is 970% above the 50-day average, meaning it is 9.7x. It is 9.7x of the 50-day.
Right, great, thanks for that. Right, so you know, a very nice way to quickly find what moved, what didn't move, etc. And here we can do something else, which is we can group it by industry. So let me do that. Right, so you can now look at only the cement stocks or the petrochemicals, etc. Let me look at where did metals disappear. Yeah, great. So you can do that. I'm learning along the way, so please bear with me. So lots, we've got metals here, and in that, oh, okay. So there was some metal stock that's not included. Okay, so this is just one feature which is there, and if you were let's say we were looking at power and we said power was strong, right? Now what you can see here is overall in one screen that definitely all the power stocks went down on today, Friday, right? And having said that, you know, if you just do this, Kalpataru power went down 3%, but only on 23% of the 50-day moving average volume. Now, if I were to quickly, let's say, just put this up, or let's put Adani, right? So that's also F&O stock. So let's do that. So you've got Adani Power here, right from 2010 onwards. So Adani Power went down by 0.74% on 69% of the average volume over the last 50 days. So What does that tell us? So I've ranked it from lowest volume to highest volume. You can also do it the other way. So if I were to look at Adani Power now, right, you can see more or less the similar picture that we spoke about in the BSE Power Index, if you recollect. And what you have is this multi-year base on Adani Power here, right? And then you have an important resistance there at around 66 rupees. You have definitely several resistances before that. One is at 50 rupees, a pure psychological number, nothing else. And what you have, if I were to now zoom in, so let me make it weekly, right? Okay. First of all, okay, so that maybe this will be instructive also. On the weekly chart, this is one downtrend line you could put. All of you who know technical analysis, I hope you'll agree with this line. And you can clearly see that downtrend is over. The stock now went into a sideways trend. It formed a very big bowl over this period, and let me, this is really good, right? So let me just zoom in on this. Okay, so one of the things about bowls and saucers and all of that is that you want to also see that in the volume part. So especially if you concentrate here, and if you look at the volumes here, the volumes dipped and the volumes went up. So very little selling and very strong buying that is going on when the market bottomed out. And then you can see that at this point it's gone up. When it corrected here, it corrected on low volumes. It went up again on fantastic volumes here. So what are you getting a sense of? And remember, this is a weekly chart and we're seeing 3-4 years of data. You're seeing basically what in growth theory we call accumulation. All right, there is strong buying interest at those lower levels that is going on in Adani Power. Now this is from a multi-week, multi-month perspective. Then you had this correction which happened towards the second half of 2014. It went down clearly on lower volumes. These are like the shorter term traders, the retail guys who don't have the foresight or the strength to bear losses, so they're selling out. And then now what you see, let me make this now daily. All right, so you get a lot more noise, but you'll also get finer things to analyze. So if I go back to this, you can see very clearly here in the whole of end of Jan and Feb, you got a good pickup of volume, and the stock has gone up on clearly good strong volumes. It's coming down, yes, in the last 1 week, but it's coming down on low volumes. Now we all know that stocks going up on high volumes, coming down on low volumes is a good long-term bullish sign. And if I even take this shorter term trend line and put the most extreme line I can put, that has also been broken. Let me go back. So what I'm saying is both long term and short term things are syncing up on the bullish side. Now when I zoom in or zoom out, whichever, what do you see, right? Now for those of us who know, how many of you know, let's say growth theory well, there are a lot of interesting pattern data. There's a head and shoulder bottom here which actually broke out of the neckline and it went and met its target. And what is very interesting is it is now forming a multi-year head and shoulder bottom. Adani Power is forming a multi-year head and shoulder bottom, right? As a matter of fact, when you find something like this, I'm very tempted to say, so I'll say it. If you just ended the webinar here, I think you got your money's worth. It's free anyhow, I know, thanks to Investar and Himanshu. But here's a multi-year head and shoulder bottom. This whole thing here is, I think I can label, what is this text? All right, great. This is the left shoulder. Okay. Can I move this? Yes. Great. Okay. So this is a left shoulder that happened over 2012. We have a big head. All right. This happened over again 1 year. And you have the right shoulder in the making. So I'll just put dots there, right? So you have the right shoulder here in the making, and you have a nice trend line at around 66 rupees. Now you have to really understand that you and I have shifted into a world where you're looking at everything and looking at WhatsApp, looking at SMSs, looking at your Facebook, and thinking, and you and I have gotten into this mode of thinking life moves every minute, every second, every hour. Life doesn't move like that. You want to create long-term wealth, it requires a hell of a lot of perspective and a lot more patience. So try and get a sense of what we are talking about here, because we are talking about 3 years that it is taking for a pattern to evolve. You've got a whole almost 9 months for the left shoulder, you've got another almost 12 months for the head to form, and you're getting this over the other 9 months for the right shoulder to form. I can't promise you anything. I was actually going to say that, sorry, I can't promise you anything, but I'm pretty confident that sometime towards maybe the second half of this year, the right shoulder of this Adani Power will probably get completed. And let's drill down now. So I hope everybody's got the big picture. So what does that mean when you say the right shoulder will get completed? The stock has to at least go back to 66 rupees, right? And then the breakout could happen. So let's meet after 6 months, let's meet after 1 year and review this, or at least you should be reviewing this every week to see how this goes. And if something changes, then we have to review and change our point of view. Now notice this, today's candle, big red candle, but look at the volume, right? You can clearly see that this up move here happened on higher volumes. You can clearly see that this up move happened here on massively big volumes. You can clearly see that this fall happened on lower volumes. You can see that there's a whole deal of consolidation here because the volumes are so low. And then you can see it went up on higher volumes. And then you can see that today it has come down on very low volumes. Broadly, the bottom line is this. This is exactly how consolidation, this is exactly how a base gets formed. This is exactly how you find stocks to invest in. This is an investment stock from a technical perspective, right? It also happens to be in the power sector, which is what is from the studies we did is showing strength. It is Adani Group, all right? So I don't know about political favoritism and all of that, but Mr. Modi did use an Adani private jet for his campaigning last year. Obviously they are close, and you know what, you can cry about life not being fair and every even playing field, but let's keep that for the romantic novels to write when we are really old, 20 years down or 30 years down, whatever. But you want to make money, and that's where the money is probably going to be. He's going to get deals, he's going to get contracts, and his company will do well. Recently I think there was talk about some restructuring that is happening in the Adani Group, not necessarily Adani Power, and that's going to perhaps unlock value. So I'm just building the theme here. All right. Now what happens is that every opportunity that the stock goes down, what do you think you should do? You should be buying this, and you should definitely not be shorting Adani Power. Okay. Now, what sort of trade or investment could you do? You could look at several different ways of doing this. For example, if you are a trader, I would say maybe at around 45, if it comes there, I don't know. You could start going long on the futures or buy calls, buy the 50 call for Feb or Adani Power, and if it doesn't even make money, then then go buy the 50 rupee call for March and rotate. And if you're doing futures, just roll over depending on your risk appetite, etc. On the other hand, if you are a spot guy, you are building a portfolio, then this is a stock to definitely have in your portfolio. What are the levels that we are talking about? What prices can we expect on Adani Power? So that allows us to look at risk-reward risk-reward calculations and look at whether it's worth taking the risk. So let's do that from a technical perspective. So let me zoom out a bit for that. And so if you look at the support resistance levels that I drew, then at this level at around 41, 42, there is definitely strong support. And if that breaks, then I would sell the stock. Maybe it will go back down all the way to 35. Then I will review that. I'm talking from a short-term, multi-day, multi-week perspective. All right. On the upside, what can you expect? On the upside, I would expect that once this reversal happens, which could easily happen next week. Okay. Remember, we are getting into the budget season, and the government would announce various breaks, incentives, etc. for a host of sectors, especially the core sector, and that is going to be a boost for a company like this. So if that happens, then suppose it reverses from say 45, then at least 50. At least 50. What's the lot size on Adani Power? Can somebody just post that lot size, right? Then we can do some more calculations. You could go along. 50 would be the first resistance from a short-term trader's perspective that you would look at, and maybe you want to cash out at 49.75, 49.85. You don't want to be too greedy. And once 50 goes, then all these other levels, 55, 60, and then definitely 66 as we put here. But actually, if we put a sort of zone, then that is the zone of resistance. Okay, not a specific level, a zone of resistance somewhere between 60 to 66, and that 10% zone, and that's how resistance is. It's not a specific number, right? So that's the target I would wait for 60, 65, and then from a long-term investor's perspective, somebody who's going to hold this for, let's say, the next 3-4 years, then I think extremely good time to buy. Start an SIP, just keep buying it, and once it crosses that 66 mark, then you are going to be in a bonanza. We are talking about definitely 80, and after that, what are the other technical important resistances? Then 90. Psychological numbers tend to play a big role in technical analysis, and then definitely 100, but 110. Right? Now, let's get some perspective. Okay, thanks. It's 8,000 is the lot size as of now. Let's zoom in and get some perspective on this. Himanshu, can I also get what's the margin required for futures on this? Then we can do some
that information I don't know how to get.
Okay, no, that's okay, fine, give it. We'll have to maybe log into a trading account for that, because it can vary from broker to broker, just roughly, I mean. All right, okay. So let's put it this way, you get in at around 47 at the current price of 47.50 also, and it breaks down at around 40. You're taking a risk of 7 rupees from stop loss perspective. I mean, there are better ways to calculate stop losses, but maybe we'll have that for another day. And then on the other hand, if it goes up to 60, 65, you're talking about from 47 to 57 is 10 rupees, another 13 rupees, 13 to 18 rupees as your profit versus say 6 or 7 rupees as your loss. That's a 2:1 risk reward ratio. You're talking about whether that's good or not, each of us has to decide. There's one thing that gets confused, that people tend to get a little lost on when we talk about risk reward ratio. You need to also look at probabilities. And what do we mean by probabilities? What you mean by probabilities is what's the chance of it going up versus what is the chance of it going down. Okay, that is what you need to be really, really clear about. Now, from the technical analysis we have done, you tell me, if even if you are a novice technical analyst, and if you knew this thing about left shoulder, big head, and right shoulder, then the probability is that will go up. If you are a conservative investor or a conservative trader, then wait for the right shoulder to form, let 66 break out, then the probability, okay, not the risk reward ratio, but the probability will significantly improve on the stock going up. And then you want to get in both as a trader as an investor. So if you're a conservative person, don't want, you feel that there's still more downside, then you'll have to wait for 66. But guess what? You're at 47 now. 66 is almost 20 rupees more. You're talking about a 50% move that has to happen on the upside before you take a call. And a conservative investor will do that. Must be very clear about that. Right? Don't get greedy. So the stock will have to move 50% then for you to get in. Now, even having said that, suppose you get in at 66, on a massive 3-year, maybe 4-year head and shoulder bottom like this, I can tell you for sure that the uptrend is not going to get over in 1 week or 1 month or even 1 quarter or 2 quarters. There will be an uptrend with the associated corrections that will probably go on for a year or more. And easily that uptrend could take the stock to 110. So even if you were to take that view, let's say 47 rupees now, let's just for the ease of calculation, we'd say it's 50 rupees. 50 to 110 is a cool 120% that you're talking about, right? Let that happen even in 2 years. I don't care. I think it'll happen much faster, but even in 2 years, you're talking about the 50% upside just for sitting on a stock and doing nothing. Doing nothing is what makes you money, not doing too much. Do less, you'll get more. Right? That's how markets work. That's how life works. That's my belief. That's what I've learned. Right? Those of us who are doing too much trading, you know your truth. Right? I don't have to tell you. I've been a day trader myself for 3 years, about 5-6 years back. I had lots of fun, all the blinking lights and having the highs of the day and getting depressed the other day and all of that. I'm no longer a day trader. I'm more a long-term positional type guy, both on the spot side and on the derivative side. You have to get used to the mark-to-market fluctuations, and you need to be able to sleep well even if you lost 20,000 or 50,000 in a day. But you have to have the confidence that you'll recover because the stock is going to go up, right? And you must have your stop losses and all of that. Okay, but I'm sorry, I'm digressing. So let's come back to this. So you're talking about a stop loss of, let's say, 39 rupees and a first target of about 57, 59 rupees, then 65 rupees, and then 90 rupees. Now you decide. So, when we talk about, say, 39 rupees, we're talking about 8 rupees downside, 20% loss versus 110% gain. And I'm talking from a 1 year at least perspective. You've got a 5:1 reward risk ratio in your favor. Probabilities are that this is highly likely to happen. And let's come down to calculating our trade on the FNO side. So we are talking about, just again for the ease of calculation, I'm going to take it from 50 to 110. That is 60 rupees. 60 into 8,000 is how much? 5.4 lakhs. Correct? No. Is my math right or wrong? 8,000 into 60 is 6.4 lakhs.
4.8.
Okay, right. We are all bad at math. Yeah, 4.8 lakhs. Sorry. All right. So you got 4.8 lakhs that you could make. On the downside, if let's say 39 is your stop loss, then you're talking about 64,000 rupees is what you could lose. 64,000 rupees is what you could lose. 4.8 lakhs is what you could gain. Let this happen over 1 year. Just roll over your futures. That's it. I mean, if you're a day trader, this is not going to make sense to you. Right? But if you're a long-term trader and you can stomach that sort of returns, then you're talking about a multi-bagger on your investment, because I'm sure that, let's do just quick math. Okay, so 8,000 is the lot size. Price is what? What is the price? 47. So contract value is 3.6 lakhs. Even if at on an extreme basis your margin is at around 30-40%, you're talking about 1 to 1.2 lakhs as your margin money, and you're talking about maybe losing 20-30,000 rupees of that, but on the other hand making that go up by 4x over 1 year. So you're talking about a multi-bagger with a very high probability of success. All right. So this is what we found, and I think it just tied up everything that we discussed so far. We found a sector which is showing strength. We found a stock which is now leading to the screener going down on low volumes. We found a pattern which is like terrific and multi-year in formation. We've got something which is extremely high probability of doing the target. The risk-reward ratios are in your favor. Now you decide. I mean, do you want to play this on the spot side? Do you want to play this on the derivative side? Do you want to do this as intraday, or do you want to do this as multi-week? I don't know. That's up to each one of us. So there you have it. I mean, if there's a call for today, then this is it. I mean, I'm sure there'll be lots more if we spend the whole night. But this is for starters. Does anybody have any questions on this before we move on to something else? No? All right. Okay. So Rajesh is asking, can we enter when momentum builds up? Yeah. See, what do we mean by momentum builds up? You've got to be clear. A lot of us, I'm very, because I've done this before. I'm, nothing personal, Rajesh. We use these heavy words, momentum, position, and all of that. But what exactly do we mean by that? So if you mean that you're going to look at volume building up and then you want to enter, yeah, sure. But then you're going to look at how is volume going to build up. And I think that's exactly where, something like the screener that Investar has is just brilliant, because you could put this on a 5-minute screener or a 15-minute screener, as you all know. There is this feature which is there, and run this intraday, and it will pop up and it will give you an alert. You can do that. That's a separate feature which I'm not too familiar with right now. I will become familiar, I promise you, in the next few weeks on this. And then you say, I want to get in. Now, if I were to, let's say, do intraday charts on this, and let's make it a 15-minute, and I think we'll just make it, okay. Let's zoom in. So this is, you can see the intraday now. So what you can see intraday clearly, first of all, is how 47 has been a fantastic support, right? You've got your lows sitting there, 46.90, 47 rupees. That's really good support that it has done, right? And if you're brave enough, this is the place to buy, because you're seeing some sort of consolidation. You're seeing a lot of volume here, and the last green candle was on large volumes. However, this selling happened on big volume. But remember, this is selling on Thursday. So this is one very important thing. You've got to be able to differentiate what might have caused something. Now, technical analysis cannot tell you what happened. It can only tell you what the stock price did, but it cannot tell you what the causes were, what the circumstances were. And that's why it's so important to have a overall perspective of the market. Read newspapers, watch the news. Don't listen to those guys, but just get the news. So this is the ECB statement on Thursday afternoon, India time. It said that they will not accept Greek bonds. And that's the selling that happened, and this was sentimental, purely sentimental, absolutely nothing else. You had this bounce on Friday. You have this test of support again here, and let's see if this holds from the past. And you can see that that's a beautiful resistance that has happened. So resistance now acting as a support, and this goes all the way back. Okay, so since we are in the intraday format, we can get only from December. Good enough. All right. So this is the correction that has happened. Now, if you want to enter now, let's say with, like I said, momentum, right? Please note, see how the volume is here. Fantastic volume on the move up. Every candle up here, intraday candle, 15-minute candle, up moves have happened with really, really good volume. And any down move, however substantial, even this one here, right, has happened on comparatively extremely low volume. So what you want to know is that the longer term trend prospects, everything of this stock is bullish, not bearish, whether you're looking at a multi-year perspective or you're looking at a intraday perspective, right? Now, if I were to do this and put a downtrend line here, and some of us, there's always the debate, which is the best downtrend line. I really don't know what the answer is. I can put one here also, right? And you can let this run into the future. And there are now various places at which you could enter. So you could wait and buy support here. And if you do this, your stop loss would be a little bit, maybe just 50 paisa, 1 rupee below this, and a very small stop loss. If you're doing an FNO trade, you're not going to lose more than 3,000-4,000 rupees, right? And even if this goes from 47.25 to even 48, you're talking about making 5,000 bucks, maybe an intraday basis on Monday or Tuesday, right? So you can do that. Oh, by the way, so on Monday, BIC, we are having a live trading session all through the day from 8:30 in the morning till 5 o'clock in the evening. We look at things live, news live, results live, daily news live, and actually look at live stuff. So Himanshu, just to let you know, I'm going to be using Investar extensively on Monday, real time.
Great. So just make sure to use the screener. Then let me know if you need any help.
Absolutely, I've just fallen in love with this. I'm just going to put the screener there and let it keep counting the alerts, and that's what I'm going to do. Made my life very easy, actually. Thank you. All right.
Oh, you have used it actually.
I was using it, like I said. You and I did that trial. You were taking me through it, but on Monday I will do it live. Sure, and we are having about 15-20 people from Bangalore Investors Club who are going to be there for the live session. So it's going to be, I think, a really, really exciting and a very different session than we've had before.
Sure, sure.
Just wanted to point out that timer is running out. I don't know if there's something to extend the session, or it will stop here. So
Okay, is it? I checked on the site already, and I cannot figure out a way to extend it because I also felt that, you know.
So we are still here. It's gone red. All right.
Okay,
So
okay.
just want to check with everybody else. We've done 2.5 hours. Are you still here? Just say yes on the chat, because otherwise, if you got disconnected and webinar threw us out, then nah. All right. Some more yeses, please. Then we'll continue. Otherwise, you know.
Okay, so looks like a lot of people are here, and you know, in case we are sort of, I think this session was really excellent. The whole analysis, including the outside markets. But yeah, let's move on anyways.
Yeah. So just do you guys want to continue, because it's 9:45? We can do another. I don't know. I just love the markets. I love the whole night.
So same here. So I think the audience has to decide. Both of us are fine.
Yeah, we are both fine. So you guys tell us till when do you want to do this? 10, 10:30? No, we can take a lot more cases somewhere, not just one. Not a problem. All right, so I'll just continue, and I hope the recording is on, because I don't know how this whole thing works. Whole night, Rajesh, I've got a class at 6 o'clock in the morning, so I will stop at some point.
I have a class at 9:30, so.
Yeah, okay. So both Himanshu and I will have to go at some point, and then you guys enjoy your weekend and figure out, you know, what stocks you want to trade and what you want to do on Monday morning, right? Okay, fine. So let's get back to this. So Adani Power, from a short-term trader's perspective, this is what you would do. From a long-term investor's perspective, things could be a little different. You might want to see more evidence for the upside, momentum, volume, etc. And then it's a question of, do you want 48 resistance to break, 49 resistance to break, do you want this trend line to break, do you want the, whichever trend line, you know, there is no end to this. The bottom line is this: the more evidence you want for a certain view, the more the stock would have already moved in the favor you want it to. So there's a trade-off which is always there. You can't avoid this trade-off, all right? So there are two sort of conflicting views. One is you buy at support here, even though support has actually not bounced off right now, because this could really break, support could break down on Monday. We don't know that, but you take the chance. The advantage of that is your risk is low, and if the market does go up, your profits are also higher. Okay, so you've got something very favorable that way. The problem is that you're taking a higher level of risk. The probabilities are slightly on the lower side, right? On the other hand, if you say I'll buy it after it breaks out 49.50, then you're going to already lose 2 rupees of a move, but you are more confident of that move happening, going on the upside. And your risk reward is a little less favorable, but the probabilities are higher in your favor. So that's the trade-off that you know, all of us have to debate and then figure out how you want to trade. And each one's call is really unique to themselves. There is, I don't believe in textbook standard procedures. We've got to each figure out our niche, right? Okay, great. So that's it on Adani Power. Are there any questions on Adani? I will take more charts, but are there any questions on Adani? Do we want to move on? Right. So I hope you saw almost everything that we discussed today tie down on this one chart, one really good opportunity, and I really hope you guys go out and make money on this. Okay, so let's take a stock that was requested earlier. I think Ravi asked for a housing finance company. I just put up say LIC, or was there something specific? All right, so this is LIC Housing Finance. So one more nice thing about Investar is it's got this corporate dividends, you know, on the chart itself. So the D stands for dividends. So these are when the dividends happen, and you click there, you know the dividend was for 3 rupees 50 paisa. Here it was 3 rupees 60 paisa, and here it was 4 rupees 50 paisa. So you know, great. But Ravi is asking for Canfin Homes. So we'll do Canfin Homes, not a problem. Right, so Canfin Homes, right, so there's a lot more. So very interesting for Canfin Homes, because what do we have here? Let me do quickly. Right. So you can see first of all that the stock, again, to demonstrate technical analysis and why people like Himanshu and I just love this, is that the stock was were not going above 100 for a very long time, for many years, and then it broke out somewhere in 2010, and you can see the massive volumes that happened. So there must have been some trigger. It went up to almost 175, and then came down and did a nice base formation again on low volumes, and again broke out 2-year base formation. The stock got into a different zone altogether, and okay, so 2010 new MD. Thanks, Ravi. Right? Okay, so that's so it's great to be able to tie those sort of things. And the new MD probably was somebody who's a go-getter, was known for his aggressive approach to business, his ability to get things done, and great, and the market reacted to that. And then we probably had some results. I don't know if Ravi has some input on what happened in the end of 2012, and again it shot up, corrected, and then, so this is the level that you had, and the big move happened somewhere in 2014, right? So God knows what this was, the Modi effect or whatever, but something major happened. Now, if you were a technical trader, you would have basically said, you know what, I need to watch for these levels. You would have put an alert in your system, all right, and you would have definitely, once you've gotten that alert, which by the way, Investar offers, right? So you can put alerts. Can I put an alert from here?
From where?
Just from here. No, okay, I can't. All right. I was just looking at right click and there's a alert tab there.
Oh, okay. Okay.
Something maybe you can add. All right. So you would have gotten that alert that it moved, say, above 175 or 200. It did that on volumes. I'm sure the screener would have shown you that because the high volume happened here. And then something just, God knows, and this is a weekly chart, but in 1 week it just shot up from 200 to 350. God knows what
Well, incidentally, Dr. Musa, actually this Canfin Home and this entire finance housing industry came up in the scans, at the beginning of Jan. I mean, of course, recently actually. And recently also I think these things broke out, right?
True. But what I'm saying is, something major has happened sector-wise or industry-wise. Right. Sometime there, because it's not only Canfin, I think a lot of the others just the sector just got re-rated essentially. Right. So that, and then you've got this move. Let's move to now daily. All right, or actually before I go there, if you just click on the weekly chart, something to notice is that, okay, fine, the move has happened. The stock is now into consolidation mode, all right? It is not trending anymore. 500 psychological mark, it has, done this. So Ravi is giving us an excellent input that all the housing finance companies increase branches in tier 2, tier 3 cities aggressively. Fantastic, something that the chart cannot tell you. But you track news, or I don't even know if this was in the news because I never knew this. I think Ravi would have connected the dots or read some industry report or something like that, and then said, you know what, the companies are becoming more aggressive. Their tier 1 has been sort of not saturated, but the big growth potential is over. Let's go down, and that's the bigger market probably in India. Any move like that in any industry like this. I think the same thing happened in FMCG 2008-2009 when they started making, not maybe that late, a little earlier, shampoos in 1 rupee sachets, which you don't get in the cities actually, right? And you move that. So Ravi adds that in tier 1 cities, the housing finance business has been captured by HDFC, ICICI, and LIC. Great. I mean, this is industry fundamentals, industry insight. Thank you so much, Ravi, for that, right? So this has happened, and now the stock has, okay, how come I missed that 500? All right, so something, I must have scrolled left. Okay, so it's gone to 500, consolidated there for, almost 2 months, right? So this again on the weekly format, and low volumes, and again on the Jan of 2015, it just, first week just broke out, massive volumes increasing. I don't look at the volume on the right, you have to compare to the volume on the left. I know it's obvious, but sometimes the mind plays tricks. And then we've got the stock just go from 500 to 200, 700, plus. Amazing. in less than a month. That's almost 40%. So if you were having the scanner on, and if you were, so now let's do daily, you would have definitely been notified of this move by Investar, right? And then depending again your trading ability, skills, real time, end of day, holding periods, risk reward, definitely a good potential to fantastic trade that would have happened. So it goes to 600, and then you have, for those of us who know, a sort of, not really a typical, but a shooting star nevertheless, all right, formation there, okay, and then you have a sort of hanging man formation there again, but on low volumes. At that point, you would not know what to do, and then you had this big gap down, probably some news, all right. So you had some, big news that happened. And you had a gap down, and now this is just going sideways. I don't know what this would have been. Something would have happened between this and that, and it's gone sideways. Now again it seems to be being sold off on higher volumes. So because we've got very high volumes here, we can't really see it, but the indicators are definitely weak. And one of the things about technical analysis is that if you have the patience and you have the confidence, or you believe it in strongly, which I do, I'll tell you something, that almost every good important resistance or support gets tested. And what is the implication of that? The implication of that is this stock of Canfin will come to 550, 560 at some point. It's a stupid thing to say will in the markets, because only God can say that. But sometimes that's just going to happen. It's going to come down, it's going to test 550, so there's no hurry to get into this stock right now. And if 550 breaks, then maybe 500 will also happen. And you've got plenty of time to do some good quality in-depth analysis from a fundamental industry perspective, look at the valuations, and then take a call. So I think there is a valuations tab here, right?
Fundamentals?
Yeah.
Yeah. You can just do this this one here. I don't know if my cursor is there. I don't have control. So on the top there's a toolbar. In the toolbar you'll be able to select both fundamentals and technicals. No, not there. The toolbar right above where Canfin Homes is written. Yeah. Right. Right.
Yeah.
No. Right. Actually, if you can give me the mouse, I can show you that.
How do I give you the mouse?
There has to be just like that.
Fine.
Yeah, that's exactly. Yeah.
Okay. Alright, so let's zoom that out. Right, so if you look at fundamentals, for example, so
you can make it vertical. Actually, you can make it vertical. That's sometimes better, but up to you. Yeah.
Okay, fine. We can. Yeah. So let's look at PG, trailing 12 months, fairly valued. Earnings growth is earnings growth 17%, 27%, and for the financial year 14. So we're going to get another one, around the corner. So 40% earnings growth is really fantastic. P ratio is 20 here. Here it's 15, and trailing 12 months it is 18. So at least from that overall perspective seems to be good. But here's the thing with fundamentals. Fundamentals need to be put in a context, right? And ideally what you want to be able to do is compare the fundamentals of Canfin vis-a-vis other housing finance companies, and also of Canfin versus with the history, right? And Ravi's adding a couple of statements. He says this would be a good stock to accumulate after March results. All right. Does investor calculate intrinsic value and show FCF free cash flows? I don't think we have that right now, right? But maybe sometime in the future.
No. Yeah, I mean the feedback is always welcome. Send an email to support.
Yeah, so I just shoot that mail. And finance companies book value more important than PE. All right, so good. So I'm not a FA analyst, so good to have Ravi on the session today. Where is book value? Do we have book value?
Yeah, we do have book value.
Where is book
In the bottom. It's in the
right,
bottom.
okay. So book value is 273 and this stock is at what? 500 or something, 550. So that's approximately 2:1. Now whether that's good or not, I don't know. If Ravi has some inputs on that, then great. Okay. So the thing is, whatever it is, you need to have a benchmark to be able to. Okay, so Ravi says book value of 2.3 to 2.5 is good. So guys, you're getting a lot of value today, right? So Ravi, I don't know him very well, but I understand that he's fundamental guys, right? Balance sheets and all of that make a lot of sense to you. It doesn't make too much sense to me, and no plans of doing CFA in my life at this point. Maybe the next and not. Okay. Price to book value 2.3 to 2.5. Yeah, great. Okay. So, all right. So how do we go back to chart?
Oh, just click on the button on the bottom left if you want, or
bottom left.
I mean, right here in the bottom left, the small icons there, the chart.
Chart.
Yeah, right.
Yeah, right. Thanks. Okay, so what you have here, thanks to Ravi, is the fact that this is fairly valued, right, Ravi? If I'm wrong, please correct me. I'm not an expert on FA that much, though I would definitely love to learn a lot more about it. And so he's telling us that recently valued company, and it just means that the price becomes lesser the better the valuation is, right? And he's also said that good buy after March results. So then why don't we just buy it now? Why wait for the results? I would just look at it technically, but then results are all event risks. That's something that we all need to keep in mind. So in case see, just to point out something that is happening right now. All the public sector banks are correcting 10, 15, 20% in days, in 2-3 days, and nobody expected this. I don't know if it was there in the fundamentals that one could have read it or not. So this is also a finance company. I know it's housing finance and all, but it's all finance, banks, housing finance, Sriram Transport Finance. So who knows? Okay, so Ravi adds it was in the fundamentals in the banking space about banks coming up with bad results. So great, so that's not something that the charts can tell you. So when there's a result coming out, you have to know there's an event risk that is associated with it. So we now know that quite possible that, so Ravi has actually said that the price will correct. So I'm assuming that you're expecting not so healthy results. And once that is done, the price will come down, who knows, several percentage points. And from a fundamental perspective, it might be a good time to, get in. But technically, it has to come to at least 560, and then after that maybe even 520, 500, and then you'd take a call on that from a technical perspective, right? Okay, just give me 10 seconds.
Okay, so there's a question about Investar screening multi-bagger stocks. Rajesh is asking that. I'd just like to pitch in there, if you don't mind. And
yeah, sure, please go ahead.
Basically, there's no way to screen for multi-bagger stocks per se, but the screeners, especially the volume, the gainers on strong volume, the new highs and all these scans, they are potential scans to identify those multi-bagger stocks. And I mean, the reason we put in is only for that. So I hope that answers your question, Rajesh.
Yeah, I mean, what are the parameters for screening for multi-bagger stocks? It's such a, multi-baggers are all retrospective labels. That's one thing that, you'll understand down the road. How do I know this is a multi-bagger stock today? You just have to take your bet, do your fundamental screeners, do your technical screeners, exactly what Himanshu said. So maybe lifetime highs, high volume moves, 52-week highs, the entire sector is moving. And then you add to that things like what Ravi said, fundamental news, industry perspective, insights, and then you just have to take that call. Because technically on a chart, it's very difficult to say that this is going to be a multi-bagger. And I'm not an expert on Elliott wave, but some people who are Elliott wave practitioners tend to follow that and believe that strongly. I know Elliott wave a bit, but that's not my strong point at this point, right? Okay. Okay. So just finishing off Canfin Homes, 560, maybe 500, and that'd probably be an excellent time to buy it. Again, just to point out, none of the indicators are showing any strength at all, and today's move down was on high volume. So you want to wait, and also the fundamental news, wait for the annual results, and then take a call, right? Okay. What's the next talk? I think somebody asked about BHEL. Just let's do that. Rajesh, you're saying you can technically spot multi-baggers. I mean, please, I would love to know. Please elaborate while I get this up. How would you do that technically to find multi-bagger stocks? Okay, so while Rajesh puts that in LIC housing, so what is momentum indicator? And how would that help to find multi-bagger stocks? Okay, so while we're going to have a dual thread here running, so let me finish LIC Housing Finance and then I'll come back to BHEL because LIC is in the same space as Canfins, right? So LIC Housing Finance is what you're seeing right now. If you go to weekly, it's cleaner, and you have the stock. You can very clearly see again, the beauty of technical analysis. Topped out at 300 for what? 1, 2, 3, 4 years. Didn't go past 300. Finally, it broke out. And let me just see if I'll take this volume part out. And yeah, all right. So this move actually didn't happen on very high volumes. So the breakout was an iffy breakout, and then after that you had a correction. Again, that correction happened on significantly low volume, so maybe there was a hint there, but this would have been a difficult stock to trade technically because when it went up again, it went up on low volumes. It finally actually did the move here. If there was high volume if you were looking at, so maybe around 325, 350. But on the other hand, if you were tying this up with the industry-wide move, if you had a say industry sector index for housing finance, or like you put in fundamental stuff like what Ravi said about tier 2 cities and growth and all, then who knows, you would have taken a different view. But technically, this stock was not really a buy till about 325, 340, sometime in the middle of last year, and then this has just gone up. And you can see one thing very interesting, which again there in Canfin, is that you have a reversal of sorts. Canfin went sideways and then dropped. This one has clearly turned around, and sorry, before turning around this, let me go to weekly, sorry, daily, right, so you get a better trend line. Okay, that's the trend line. You can see that this uptrend line is clearly broken. So if you are a technical trader, you got out when it broke below 475. I mean, there is absolutely no two ways about it, right? That is if you were a technical trader. Having said that, it's all come down on lower volumes, right? Now, this is one thing that at the end, do whatever analysis in life you want, read whatever balance sheets you want, know the president of the company and the CEO company if you want, be the best technical analyst in the world if you want. Ultimately, your bottom line, my bottom line is a good price. And you and I have to accept that whether we like it or not. You could be analytically right, but financially wrong. And you've got to get your priorities right, all of us. Are you doing this for being a good analyst, or are you doing this to make money? I think this is one yes or no black and white answer that many of us have a confusion on. You've got to get it bang on. Look, you're in it for the money. And if the stock is going down, you are losing money, no matter how good the company is fundamentally, right? That's the reason to actually do a lot of TA. Yes, you will not find that sort of, in my opinion, that insights like what is happening in the housing finance industry from the chart, but that's a different ball game. That could all happen, but let's say now tier 2, tier 3 cities, people who are borrowing loans start to default for whatever reason, I don't know. But you know what, the chart would have started to drop much before that. So it all boils down to price. So here the trend line broke. Here your, let's say that 480 support broke, right? You can see the highs there, and the low here, the low here, the low here, and a cluster here. So once that happens, then you have a trend line which is over. You have a potential downtrend which is forming. It is not yet a confirmed downtrend, but you have to make a call on when you want to get out. Now, if you are a long-term investor, then all right. So this is weekly, and it's never nice to get evening stars on weekly charts, right? They are not good news ever. So you actually have that, right? You've got two sort of spinning tops on top. Remember, this is a weekly chart right now, and that's a reversal, right? Now, given a chart like this on a weekly side, I am very tempted to say the stock could even see 400 rupees. So the stock is at around what, 450? Another 10% fall on LIC Housing Finance to 400 is distinct possibility, 400, 410 at least, right? So if you're looking at buying, you'd rather wait, no doubts about it. And yeah, that's there. And by the way, just talking about warning signs that TA can give you, here is your RSI not going higher. That disappeared for some reason. Okay, and here is your higher tops. So you had a negative divergence which was there, and the negative divergence has now broken down. So you were already warned before, right? So that's about LIC Housing Finance. So I hope that answered the question. Let's do BHEL. All right. So this is BHEL, and what you can see is, let me do a full reset. Yeah. So this is BHEL from 2005 onwards, hardly anywhere close to its life high. Came below, this was your 2008 crash bottom. BHEL came below that, so came to 100 rupees. Amazing, 550 rupees stock, came 100. Major capital goods company. You could have said all sorts of things about the prospects of the stock, but bottom line, it made losses for you. And then let's look at what's happened in this part. So what you have here, again, the same thing that we discussed earlier. It's going up on higher volumes, consolidation on low volumes, and again a massive breakout on higher volumes, again comes down, tests at 200 rupee level, which is a sort of psychological level also, and that's a multi-year support, bounces off from there and again goes up. Now if I were to put a trend line, then this would be the trend line. Right, the most extreme trend line that I could put would be that. And now let me zoom in. Alright, so this is a shorter term time frame, and somewhere around there, around 270 is a support resistance zone. Definitely around 240. Okay, you've got that, and it's coming down, and it's coming down on low volumes, but also it went up recently on low volumes. So it could come down all the way to 240 in my opinion. Really nothing more to say on this apart from that. You've got 240 as a good support, you've got 225 as a rising trend line which has to take support on eventually. If that breaks, then we'll have to review this. But till then, it's all good, and it would be a good time to buy as long as it comes to those lower levels. And wait, there is no hurry. Capital goods overall is coming down because of the weakness in the overall market. Anything specific to BHAL in terms of anything news or fundamentals I'm not aware of. If somebody has something, then definitely please add that. Ravi is saying BHAL order book really needs to grow before one can bank on it. Growth of power stations will help it significantly. Yes, absolutely. I totally agree. Right. So the power index, consolidation in the power space, all that is interrelated. You know, if power does well, then BHAL will sort of, you know, have at least a knock-on effect, if not anything else. Bharat Forge. What am I missing? Why is it not coming? Ah, there, sorry, missed it. It's very tough to do something with stocks like this, which have gone up from 200 to 1000 rupees in less than a year. It's in my opinion, and of course I could be grossly wrong, is you've got a high risk you know, setup here. And the reason I say it's a high risk setup is when you have a stock which has gone up literally 5x or more, it's just a simple principle of technical analysis which takes time to get grounded in, that a correction also needs to happen. All right. Now, I'm not saying this is a good company or a bad company. I'm just giving a pure technical point of view. There is fantastic volume that is happening, you know, in this whole 2014 and then 2015. The stock is obviously undergoing some major transformation. The company is doing extremely well, for sure. All right, but from a price perspective, right, there has been no correction or consolidation which is meaningful except this small one, in my opinion, where it went from 900 to 700. And now what has happened is this. You have, again, pointing out that this is a weekly chart. You have a shooting star type formation on that weekly chart, right? It's just a warning. It is not anything else. Plus, please note, again, weekly chart, you have a massive negative divergence. All right. So even if I put this from there to that, you have a massive negative divergence. That doesn't mean anything. All right. It's not something to get freaked out on. Divergences need not mean that the market is going to reverse, and it just, however, means that you need to, you know, going to have to keep a closer eye on this. And for those of you who know Doe theory, then you know what this pattern is. That is a rising wedge, right? And a rising wedge is never a good sign. A rising wedge is a sign of potential impending trouble to happen. So this is the call on Bharat Forge, is that if this rising wedge were to break down, and it will happen if it comes to around 964 or thereabouts, you must jump out of Bharat Forge, right? You've got to put a stop loss, fundamentals, technicals, whatever. I don't know about that. Technically, if a rising wedge breaks, then it can be potentially a strong opportunity, a potential strong move down. Now, however, I will say two things. It is in the capital goods space, and the capital goods space overall is strong. You saw that when you saw the capital goods index. So you don't want to be against a long-term good, strong trend. All right. Second, Ravi is adding here that fundamentals are very strong. You don't want to get into a shorting position in a situation where both the sector index is strong and the fundamentals of a company are strong. You want to short go and short banks, go and short public sector banks. Maybe we should do one or two before we close for the day, because so far you looked at strong buying opportunities, strong long opportunities. Let's look at a few short opportunities. You could short, Rajesh, you could. I'm not saying no, but the probabilities of making money, the odds are, let's say, better, much better actually in some other place, not on the capital goods side. So I would get out from any long positions, but I would not short this. And when the stock bottoms out, maybe at 800 rupees, maybe at 775, I don't know. Right? First of all, I'm not saying it's going to go down. I'm just saying what the chart is telling us right now. When that happens, then maybe I'll go long again on this, but I would probably not want to short it unless I'm a really good nimble trader. So this is where it is right now on the daily chart, right? So you can see how it is. If I zoom into this part, you will see that you had this, triple star formation in a sense that is there. In candlesticks, we call it, there was a pattern called tri-star. You had this big strong confirmation, all with low volume. So that's one thing where we could say that it could take support. So you don't want to be quick to short this right now. And 1000 is definitely going to be a good support for this. All right, so 1057 to 1000. I will say this, that 1000 is very likely to happen. Okay, this is the nature of the market. They tend to test psychological numbers. They tend to test good important supports and resistances. And 1000 is likely to be tested. And after 1000 gets tested, then maybe there will be a reversal. But 1000 will very likely be tested. And then if 980 or 975 breaks down, then 900 is a distinct possibility. All right. So that is there. Okay. Just 1 second. All right. So that is Bharat Forge. So I would not short it. I would lose opportunities to get in to go long, but I would not go long now. Okay. Yeah, so defense is a big theme. So Ravi is saying companies venturing into defense production. Defense is a big theme in India in the next few years. The government probably trying to do a lot on the private sector side, just to make it India thing tying in with defense. A lot of modernization that needs to happen, and Modi being a sort of hawk in terms of patriotism, he's definitely going to spend money on defense. So a lot of companies, it's a whole theme that we are discussing in the mentorship program that we have at BIC, and a lot of companies which are looking very, very interesting on the defense side there. And Bharat Forge, I did not know, so thanks very much, Ravi, for that input that is going to go into defense. When you get news like this, that's not something you want to short. You want to look at any falls to actually get in. Okay, so that is Bharat Forge. Let's look at some banks to give us perspective of what's happening. So another company that Ravi has talked about is Piper Defense, and a bit of an underdog today, but yeah. Right. Let's look at I think PNB. All right. So this is Punjab National Bank. Let me just go in the whole picture. So this is right from 2005. So you're looking at a 10-year chart. So that's a recent update on the Investar. I hope all of you are benefiting from that, which is history is now back to 10 years. It was earlier 7 years. So that's really, really good. Okay. So we have here. Let me again some basic trend analysis. That was a downtrend line, multi-year, 3-year of PNB, broke out of that. Once it crossed 140 on good volumes, it was definitely a buy. And then it came to thereabouts 200s, and you can see that it was the resistance from earlier, sort of halted there for a little while, and then went up, and then it has gone up, crossed that 200 rupee mark on strong volumes there sometime in November, December, but could not really go up beyond 220, came back, and then the results happened last week, which we are all aware of. 68% drop in quarterly profits. That was huge, and I think this was not the result today. I think this was the result today, all right? And then after that, I think which was the Bank of Baroda or Bank of India came out, and there was another big fall that happened. So you had, if you were, let's say, here, all right. So this is the thing about, buying stocks on support. Suppose you said 200 is not going to break, but you didn't have evidence of it, going up. You would have been happy till here. It went up to 220, again not on good volumes. And then this reversal happened. You should have had a stop loss very clearly. And then, yeah. So it came here, and then it's at 206. And it comes to this, and this was the day of the result where it just cracked. Now here's the thing: you got to get a sense of PNB. It's one of India's largest banks. A lot of things, all of not only domestically but also abroad. So when a major bank like that declares bad results, it's rarely a one-off. It's usually indication of things in the sector being not so good. Before this, I think ICICI Bank had also declared results which are not really good. So this happened, it came down, and if you were to look at charts, then you'd say 180 is clearly a good support, and you would okay, all right. So here's the thing about support resistance. Once important supports break, the tendency to go down. And look, listen, here it actually went down on higher volume. So what should you have done? First of all, you should have sold your longs, and you should have also shorted. It went to 180. It broke 180. Okay, it broke 180 and did a reversal. It did a bounce. The high of this day was 179. 80, while the resistance level itself was 200, right? So again, it went here, the high was 179.70, and then it has sort of gone down. And at this point, this is today, there is a lot of weakness in the indicators. There is no strength at all. There is no buying. Then the Bank of Baroda result came out. Like I said, the State Bank of India result is around the corner, and we are here. Okay, so this is where we are. Good support, as you can see here, from end of September last year. There's a gap here which of course got closed with this down move. But if 170 were to break down, then this stock has definitely a long way to go down, and it could say come to 154, and that's a good, I think, shorting opportunity that you have there. Everything, whether it's weekly charts, daily charts, intraday, it's all a short. Let's look at having said that, companies that result is going to come up. State Bank of India, so it's corrected with the overall market. All right, it had almost come back to its life high. All right, this is post split. Thereabouts is the resistance, and now is just that uptrend, whatever was there from here, the long-term uptrend, I would say is under threat at the very least. If not over, it is definitely under threat. Okay, and if this downtrend breaks, which by all indications I think it is likely to, so that will be a break below 280, not even 280, let's say, yeah, 286, then 260 is clearly possible. Now here's what is very interesting, and this is a trade I think you could look forward to in the coming week. Somebody find out if you can what the result date is. I think it's 13th of Feb or something like that, 13th or 14th or something, not sure. right? So if this breaks down below, 280, there are two things it will break down: a support and a trend line. So if both of these break down, then this stock is easily going to 270 at the very least, in my opinion, and then very possibly till 240. Okay, so give or take 1 or 2, 3 rupees this side, that side. Don't get stuck on a number. And that's what could happen. So that is a pretty big fall. You're talking about from 290 to a potential support of 240, 50 bucks. You're talking about almost 18% after already having fallen from 325, 330 to 290. Very critical level, extremely importantly poised, and if this breaks down, then it's a definite shorting opportunity. The surprise will be if it comes out with a result which is really positive, which at this point looks very, very unlikely given how the rest of the banking sector has performed. And yeah, so I would not buy this. I would not be long on this. I would be prepared to jump out of my long portfolios on this. And let's talk about stop losses a bit. I think in terms of stop loss, it would really need to cross, in my opinion, somewhere around 303, 305 in order to actually take out this negative sentiment in the short term. So there are two ways you could do this. You could, of course, short the futures, or you could just go by the puts, or the 290 put or something like that. Probably a little expensive. Or you could short the futures and buy a 300 call. So you could do that and protect any losses. Because if you are more of a multi-week, multi-month type person, then it's much better to do things with options. Because the problem with a stop loss is that it can get hit and then the market can reverse again in the direction that you were positioned in, but you're out of the trade. All right, but doing it with the option costs you money. So then you need to get into managing your capital, strategically and importantly, and not throwing it away on wasted time value unnecessarily. Okay, so that's the call in SBI, with a stop loss, with a recommendation, with a short, all that stuff, right? All right. Negative divergence, yeah, true. But here the problem with negative divergence that Indrajit is talking about, which one do you want to take? Because if you take the horizontal line here, from here to there is no negative divergence. But if you want to take from there, earlier mid-November to there, then there is definitely a divergence. So this is again a function of you being clear about the time frames that you're trading into. Because if you are not clear that it can take weeks and months for divergences to play out, then any counter move to that is going to get you very uncomfortable, anxious, and at some point you're going to start questioning your own analysis. So that all obviously comes with just time and some bad knocks and some hard losses, and then you say, you know what, this thing really works. Yeah, so that is that, and just let me finish SBI by saying that there is absolutely no strength on any of the indicators that SBI is going to recover right now. Okay, let's wind up soon.
Yes.
There are, I know, more requests. So if there's anything really, really important, then yeah, let me know. Is there anything specific?
No, I think we should wind up, I think.
All right. So yeah, let's maybe have another session at some other time, and then maybe with this as a template, as a background, then we can really look at a lot more individual stocks. We spend a lot of time today doing sectors, etc. Please send in feedback. Send it to Investar. I'm sure I'll also.
We'll be sending, we'll be emailing all of you sort of survey. So I would appreciate if you just give us your feedback on that, and that'd be great.
Absolutely. All right. So send in your feedback. If you want to contact me, just go to BangaloreinvestorsClub.com. So
And I would also say that, you know, how many of I mean the anybody who's local to Bangalore or in that area, I think you should definitely check out all the great you know sessions that Dr. Musa has, very comprehensive training sessions, and I guess he's listing out his mobile also in case you need to
Yeah,
get in touch
you
with
just
him.
want to do that, then do that Bangalore Investors Club at gmail.com. That's the email that you can reach us on, right? But do have a look, and I definitely welcome to look forward to hearing from all of you. I hope it was useful. I would love to have your feedback, and my heartfelt thanks to Himanshu and the Investar team for this opportunity. I really had a good time using the software, though I know I covered very little of it. Learned some, and I can definitely be using a lot of it, and it has some really, really great features, I think, which all of us, I'm 100% sure that I doubt if even 2% of Investar's subscribers actually use the full potential of Investar. It's got really some great stuff. So I
Yeah.
can't wait to learn how to sell it better, actually.
Anyway, now I think let me give some concluding words. You know, I met Dr. Musa when on my trip to Bangalore. I think this was in November beginning, and we had a very good talk on a lot of things. And I think I was able to sit through the entire session despite myself being knowing some technical answers. I'm not an expert like him, but at least the session was excellent, as I can see from the comments. Thanks a lot, Dr. Musa, and really appreciate you spending almost 3 hours of your time, more than 3 hours actually, 3.5 hours. And you know, we look forward to holding some more joint sessions in the future.
Yeah. Thank you so much. Thank you, everybody. Good night. I think the recording will be available, and I really look forward to meeting up with everybody. Have a great weekend, and I really hope you make some money out of the discussions that we have today. Right?
All right.
Thank you.
Thanks a
And
lot.
good night.
Take care. Bye. Good night.